Hello students, how are you all? I hope you are doing well. In this video, we are going to start a new chapter that is accounts from incomplete records. Accounts from incomplete records. This is very important chapter from examination point of view. Here you may get 5 to 10 marks problem in the examination for sure. Almost in every attempt they have given a question from this chapter. And the nature of this chapter is preparation of final accounts of a sole proprietor. Preparation of final accounts of a sole proprietor. Sir, already we have learned preparation of final accounts of non-manufacturing entity and manufacturing entity. Yes, yes. So here also we prepare the same financial statements, but the information which they have given in the preparation of final statements or final accounts of non-manufacturing entity or manufacturing entity is trial balance and information. I repeat, there they have given trial balance and some information adjustments. We have prepared financial statements or final accounts, but here you will not get any trial balance. Here you will not get any trial balance. Here just they give you some incomplete information. Here they give you some incomplete information, so you have to prepare final accounts of that business organization. The nature of preparation of trading account, P&L account and balance sheet, the concept is same, but the information which they have given in the problem or which they give in the problem, that is different. So there you have to identify the difference. Now, in this chapter, what are the things we newly learn that we understand? But ultimately, the requirement of the problem is what? Preparation of trading account, profit and loss account, and balance sheet. Preparation of trading account, profit and loss account, and balance sheet. Don't forget. Is it clear? Yes, sir. Now, here you can observe first, before understanding the chapter or before entering into the chapter, here, what is the chapter name? Chapter name: Accounts from Incomplete Records. Accounts from incomplete records. Here you may ask, sir, what is incomplete records? To understand what is incomplete records, first we try to understand what is complete records. What is complete records? See, complete records is nothing but, so here you can observe the complete records. First of all, here you can see the accounting cycle. Accounting cycle. In any business organization, if this accounting cycle is followed, I repeat, in any business organization, if this accounting cycle is followed, then it is called accounts from complete records. Accounts from complete records. If in the any organization the accounting cycle is not followed, in any organization the accounting, if the accounting cycle is not followed, then we can say that that is nothing but accounts from incomplete records. So what is complete record? First observe carefully. First, we identify the transactions and events. The identified transactions are recorded into journal. Next, the journal entries are posted into ledger accounts. Ledger accounts. After posting of ledger accounts, after posting of entries into ledger, now we balance the accounts, casting, totaling, and balancing. After completion of posting, casting, and balancing, we prepare a trial balance. We prepare a trial balance which is not adjusted for any unpaid expenses or outstanding expenses, prepaid expenses, or incomes receivables at the end of the year, or incomes received in advance, or any depreciation adjustment, any interest calculations. So all these are nothing but adjustments at the end of the year. If we prepare the trial balance before adjusting all these things, then we call it as unadjusted trial balance. What is that? Unadjusted trial balance. After preparation of, see, in the final accounts of sole proprietorship, there we get trial balance. and we get some adjustments. Whatever the trial balance given in the problem, that is known as unadjusted trial balance. Unadjusted trial balance. After that, we record adjusting entries now. We record adjusting entries. After recording the adjusting entries, we post them into various ledger accounts. Again, we balance the ledger accounts. Again, we prepare the trial balance. Now, this trial balance is known as adjusted trial balance. Adjusted trial balance. Now, this trial balance contains various outstanding expenses, incomes received in advance, any income still receivable, any prepaid expenses, any depreciation, any interest calculations, all those things. Now, this trial balance will contain. From this adjusted trial balance, now we prepare final accounts or financial statements. One is income statement, preparation of financial statements. One is income statement and another one is position statement. Income statement we have prepared in two stages. One is trading account, another one is profit and loss account. By preparing trading account, we have calculated either gross profit or gross loss. Either gross profit or gross loss. By preparing profit and loss account, we have calculated either net profit or net loss. And this net profit, see, the gross profit or gross loss of trading account is transferred to the profit and loss account. And the net profit or net loss in the profit and loss account is transferred to the balance sheet. Did you remember that procedure? Yes, sir. Now, position statement we prepare in the form of balance sheet. This is prepared to know the financial position of the business organization, means how much of assets the organization is owning and how much of liabilities the organization is owing. That's why at the end of the year, when we prepare the balance sheet, automatically assets is equal to liabilities plus capital. Assets is equal to liabilities plus capital. Balance sheet total assets is equal to liabilities. Assets is equal to liabilities. So liabilities we can classify into internal liability and external liability. Now, internal liability is nothing but capital. So balance sheet is nothing but assets is equal to liabilities plus capital. This is our balance sheet, sir. Yes, sir. This is our accounting cycle. If we start recording the transaction from beginning and preparing the financial statements, then this is called our accounting cycle. Any profit which we calculate or which we have calculated by following this accounting cycle is true and fair profit or loss of the organization, at the same time true financial position of the organization. To follow this accounting cycle or to prepare the financial statements, we need to follow this accounting cycle now. Yes, sir. We have to employ one accountant. Have to employ one accountant, one chartered accountant, or at least one normal accountant we have to employ. Now, here you can classify the business organizations into small business organizations, medium scale organizations, at the same time large scale organizations. In the medium scale organization also, that depends on capital investment. Suppose I am doing business which I have in which I have invested only 5 lakh rupee or 10 lakhs rupee. It is very small business. There is another business in which I have invested 50 lakhs to 1 crore rupee, or I have started a company in which I have invested some 50 crore, 100 crore rupees. Based on the investment and size of the organization, we can classify the organizations into small, medium, and large scale industries or organizations. Here, normally the business organization which can afford an accountant, they can employ the accountant, and the accountant will follow this accounting cycle, and he will calculate how much profit earned by the business and what is the financial position. Is it clear, students? Yes. Now now we are going to talk about small business organizations which are not capable of employing which are not capable of employing an accountant, full-time accountant, but they would like to know the profit or loss. Even though they are unable, they are not in a position to employ a full-time accountant, but at the end of the year they are interested to know how much profit they have earned. At the same time, what is their financial position? I hope you are understanding. Is it clear, students? So if a business organization employs an accountant, what he will do, he will collect all the source document and he start recording the transactions in the books of accounts. Automatically they prepare ledger accounts, unadjusted trial balance. Then after, at the end of the year, they record adjusting entries. After that, they prepare adjusted trial balance. After that, they prepare financial statements. This flow will follow. They will follow this flow. Yes or no? But you observe, during the year no accountant is employed in the business organization. In that case, how we prepare the financial statements or final accounts of the business organizations? Is it clear, students? To understand that, we are learning this chapter. We are learning this chapter. So this chapter aims how the profit or loss of a business organization, that to a small business organization, is calculated, in which they they don't maintain proper books of accounts. To prepare the financial statements, you need proper books of accounts, now proper bookkeeping unit. But in these organizations, there is no proper bookkeeping work. There is no journal entries recorded. There is no ledger accounts maintained. In that case, how we follow or prepare the financial statements of these small business organizations? And these small business organizations, generally they don't require any financial statements. Why? Because they are, most of the cases, they are simply sole proprietorship. Whatever the amount the business earns, they will take that amount, and they will meet some personal expenses also out of that amount only. Out of that amount only. But whenever they require, whenever they require some loans, whenever they require some bank loans, or whenever they require some housing loans, or any for any business expansion, in that case, when you visit the bank for a loan, the bank will ask your financial statements. The bank will ask your financial statements. In that case, these small business people will approach the accountant. Will approach the accountant. Okay, now we have to collect the information from this small businessman, and we have to try to prepare the financial statements. In that case, so to prepare that, we are learning this chapter. Is it clear, students? And one more thing, to understand this chapter na, you need thorough knowledge on this accounting cycle. You need thorough knowledge on this accounting cycle to remember. Clear, everybody? Right. Now here we have two systems of accounting, two systems of recording business transactions. Observe here. So here we have recorded account. Here first we have discussed what is accounting cycle. Then after, look at systems of recording business transactions. We have two systems of recording business transactions. First of all, look at here. First of all, the transactions. Whenever a transaction is happened in the business, every transaction has two aspects. Now one is receiving aspect and another one is giving aspect. If both the aspects are recorded, both the aspects are recorded for some transaction, if both the aspects are recorded in the books of accounts, it is called double entry system. It is called double entry system. I repeat, a transaction happened in the business and every transaction has minimum two aspects. If both the aspects, debit aspect and credit aspect, if both the aspects are recorded in the books of accounts, then it is called double entry system. About the double entry system, already we understood in the first chapter, that is journal. Zero chapter is basics of accounting. First chapter is journal. There we have discussed about double entry system. So you can refer journal entries chapter. Now we have another type of system, that is single entry system. Sir, single entry means only one aspect of the transaction recorded? No, students. Single entry system doesn't mean that only one aspect of the transaction is recorded. No. Here what happens? Here what happens? Observe carefully. Under single entry system, for some transactions, both the aspects are recorded for some transaction. Both the aspects recorded. For other transactions, only either one aspect is recorded for some other transaction. For some transaction, there might be no entry at all. There might be no entry at all. Sir, can you give me one example? Yes, students. Suppose in every business organization, generally in every business organization, if you observe, whether it is small business or medium scale business or any large scale business, you take any business organization, generally they will maintain cash book, students. Generally they will maintain one cash book to record all cash transactions. Okay. In some businesses, they also record some creditors ledger. Creditors ledger. When this creditors ledger is maintained, whenever whenever we purchase goods on credit, then we maintain one creditors ledger. We try to write their name, creditor name, on which date goods were purchased, or how much amount goods were purchased. See, creditors ledger, it doesn't mean that they prepare creditors account. No, they just maintain one small statement, like suppose this is date of purchase. So here creditor name, and here the amount which we have purchased. See, simply one creditors ledger. So here they will write and serial number, like that. Okay. So I have purchased on suppose 1/10/24, and I have to pay Mr. Rao, and I have to pay some 1 lakh rupee. Okay. Or for each creditor they maintain one paper. Suppose you can take one book. A book contains various papers now. So one paper is meant for Mr. Rao. Another paper is meant for Mr. A, Mr. B. Like that they may maintain one page. Whenever I pay amount now, what they will do? Okay, I have paid 50,000 rupees. And what is the remaining balance? Sir, 50,000 rupees, sir. Like this, they maintain some creditors ledger. At the same time, debtors ledger. Debtors ledger. Debtors ledger also they maintain. When do they maintain debtors ledger? Sir, they maintain debtors ledger only when they sell goods on credit. Suppose in my business, if I sell goods on credit, if I sell goods on credit, then I will make a record of all debtors name now. A small business people, they will maintain one small register. In that, they maintain the first page index of the debtors. Index of the debtors. Okay. First page, Mr. A. Second page, Mr. B. Third page, Mr. C. Whenever we sell goods now, first we see the index. To whom we sold goods? Sir, to A, sir. We open A account. Means first page we open. If you open first page now, you find A account. Yes, sir. There we make a entry. Not in the form of journal entry. Do remember, not in the form of journal entry. You can visualize that. Suppose if you have any nearby grocery store in which you buy the grocery items on credit, just visualize. Go and see that in which book they are maintaining your account. During the month, what we do? We purchase goods. At the beginning of the next month, what we do? We settle the account. Again, in the next month, during the next month, we purchase goods. Again, in the first week of next month, we settle the account. Like that, what we do? We maintain an account with the grocery store. Is it clear, students? So the grocery store keeper, what they will do? They will maintain debtors ledger, in which they maintain debtors list register, and what is the amount payable by them minus amount paid, remaining balance. They will not maintain debtors ledger in the form of T-shape account. No, normal statement format. Is it clear, students? Yes. So in most of the business organizations, they will maintain these three registers. One is cash book, another one is creditors ledger, another one is debtors ledger. Cash book is maintained for the purpose of controlling cash. Creditors ledger is maintained to know how much amount is payable to different creditors. And debtors ledger is maintained to know how much amount is receivable from debtors. I hope you are following, students. Yes, sir. Now observe here what happens is under single entry system, for some transactions, they record both the aspects. Sir, both the aspects means what, sir? What, sir? Simple. Suppose a debtor has to pay me some 10,000 rupees. Now, debtor paid 10,000 rupees to me. What I will do first? I will. So, okay. Okay. Here, observe. Second one, creditor. To the creditor, how much amount I have to pay? 1 lakh. How much amount I am paying? 50,000 rupees. So, 50,000 I am deducting here now. This is nothing but entry recorded. This is nothing but entry made. This is nothing but entry made. Do remember. They will not record the entry as we record in the books of accounts na journal. No. The entry is not like that. The entry is this. Okay. Minus 50,000. What is the remaining balance? 50. Here amount paid 50 now. First we are deducting from creditor's account minus 50, and in the cash book we write payment side now. In the cash book we write payment side now. It means that we have recorded two aspects of the transaction now. Yes, sir. But not in the form of journal. Understood? But not in the form of journal. Do remember, students. Okay. Next one. For some transactions, only one aspect is recorded. For some transactions, only one aspect is recorded. Means, suppose I have purchased some furniture. I have purchased some furniture. For purchase of furniture, I will make payment na. Yes, sir. So first I record in the cash book payment side furniture. Some 50,000 rupees. But I will not maintain furniture account. I will not maintain any furniture account. In that case, I have recorded only one aspect na. Yes, sir. Only one aspect. Then next, for some next salaries paid to the employee. Assume salary paid to the employee means I record whenever I pay salary or rent or any commission. First, I will record the entry in the cash book because it is my payment. Next, I will not maintain any salary account. I will not maintain any commission account or rent account. No. Only in the cash book I am recording on the payment side. Means only one aspect is recorded. Only one aspect is recorded. Yes, sir. And for some other transactions, there are no entry at all. No entry at all for some transaction. Means depreciation. There is no entry for depreciation. Normally, what is the entry for depreciation? Depreciation account debit to asset account. If provision for depreciation is maintained, depreciation account debit to provision for depreciation. No such entry under single entry system. Yes, sir. No, students. Yes, sir. So this is the concept of single entry system. This is the concept of single entry system. If any organization follows this single entry system, means it is not possible to prepare the financial statements of that particular organization. Why? Because they are not recording both the aspects of transaction for all transactions. Both the aspects of a transaction. Like this, for all transactions, they are not recording the entries. That's why this is called single entry. Single entry doesn't mean that only one transaction. No. That's why generally we use the appropriate word that is incomplete records. We use the word incomplete records. This is called incomplete records. Even though the the owner of the organization maintains incomplete records, he wants to know at the end of the year whether the business earned profit or not. Whether the business earned profit or not. Yes, sir. In that case, as an accountant, when he approached us, then what we have to do? How we prepare the books of accounts? How the profit is calculated? So what are the techniques we use to calculate such profit? All these things we try to learn in this chapter. Is it clear, students? Yes, sir. Now look at the single entry system. Here we understood what is single entry system. Yes or no, students? Yes, sir. So this is the just brief introduction for this chapter. Next, we try to understand how the profit or loss of this type of business is calculated from this incomplete information. Okay, students? Yes, sir. Hello, students. In this video, now we try to understand how the final accounts are prepared from incomplete information. First of all, to prepare the final accounts, we require the accounts information. We require the accounts information or information relating to assets. This information is useful to prepare balance sheet, liabilities, capital, drawings. This four accounts information is useful for us at the time of preparation of balance sheet. And most importantly, to know whether the business has earned, to know whether the business has earned profit or loss, we require the information of revenue accounts and expenses accounts like purchases, sales, expenses, incomes, other incomes, any losses. All such information we need now. All such information we need. Now here the question comes, is it possible to gather all this information or not? Question mark. Because here we have incomplete records. If you have all this information, it is easy for us to prepare the final accounts. Because if we have all these account balances now, we prepare trial balance. From trial balance, we prepare final accounts. I repeat, from trial balance, we prepare final accounts. Okay. But here we have incomplete information. That too, the businessman will maintain only cash book, creditors ledger, debtors ledger. There is no record relating to nominal accounts. This revenue and expenses is nothing but nominal accounts. To know the profit or loss also, we need the information of nominal accounts. Because at the end of the year, nominal accounts are closed by transferring to either trading account or P&L account. Either trading account or P&L account. There we can calculate profit or loss of the business organization. So nominal accounts helps us to know or to calculate or to ascertain or to compute profit or loss of the business organization. But here the nominal accounts information is missing. Na? Here the nominal accounts information is missing. That too, nominal accounts information we need for one particular year. For one particular year, for one full year. For one full year. Nominal accounts information is missing. Yes or no, students? Yes, sir. Now here you can observe the profit is calculated. The profit is nothing but the difference between revenue and expense. But here revenue information not available and expenses information is also not available. Then how can you calculate? How do you calculate the profit or loss of the? When it is not possible to collect the information about expenses and incomes, check that is it possible to collect the information of assets and liabilities? I repeat, if it is not possible to collect the information relating to revenues and expenses, check that is it possible to collect assets and liabilities information? Sir, okay, sir. It is possible to collect assets and liabilities information. Then how can you collect? How do you prepare? Or how can you calculate the profit or loss of the business with this assets and liabilities information? Hope you are following. Yes. So here, when it is not possible to know, or when it is not possible to identify revenues and expenses information, then try to identify assets, liabilities, capital and drawings information. Sir, with this we prepare balance sheet na sir. With this we prepare balance sheet na sir. Yes, absolutely perfect. Yes, we prepare balance sheet. But we need profit or loss na sir. To know the profit or loss, we need to prepare profit and loss account na sir. Wait for some time. Wait for some time. So here in this situation, you have two options. In this situation, you have two options. One, ignore the expenses and liabilities information. Ignore the expenses and revenue information. Collect the assets, liabilities, capital information. Calculate profit or loss. One way. Second way, here you have incomplete information na. Here you have incomplete information na. There is no proper recording system na. Yes, do one thing. Collect as much of information as possible and convert the incomplete information into complete information. I repeat, collect as much of as information from the businessman. Collect as much of as information from the businessman and try to complete the incomplete information into complete information, or try to convert the incomplete information into complete information. This we can do. So here, for an accountant, we have two options. First one, ignore revenue and expenses information, collect assets, liabilities, capital, drawings information as much as possible, then calculate profit or loss. How, sir? We will discuss. Second option I have, I will collect as much of information as possible relating to all these accounts, assets, liabilities, capital, revenue, expenses, drawings. Then after I will prepare final accounts. Here I am collecting incomplete information and I am converting this incomplete information into complete information, so that after converting the incomplete information into complete information, I can prepare trial balance, because complete information is, I will identify the transaction, make an entry in the journal. After that, I will prepare ledger accounts. After that, ledger accounts are balanced. The balances of ledger accounts are taken to the trial balance. From trial balance, we prepare the financial statement. Yes or no, students? Perfect, sir. So here I have two options. Here I have two options. Look at preparation of financial or final accounts from incomplete records. So what are the two options? Tell me. First option, preparation of statement of affairs, or balance sheet approach, or net worth approach, or comparison approach. So what is this? We'll discuss. This first option. This option I can choose only when it is not possible to collect income and expenses information. Second option, there is a possibility of gathering information, and that information can be converted into complete information. After converting the incomplete information into complete information, I will prepare the final accounts, means trading account, profit and loss account, balance sheet. This is second method, conversion approach. Means converting incomplete information into complete information. Here you can identify the basic difference between these two. Under second approach, we prepare complete final accounts. Sir, complete final accounts means what, sir? Trading account, profit and loss account, balance sheet. Trading account, profit and loss account, balance sheet. This is complete final accounts. But observe, under first approach, we will not prepare trading account. We will not prepare balance sheet. Why, sir? Why? Because there is no information relating to revenues and expenses now. I don't have any information relating to revenue and expenses now. You're forgetting that. Under first approach, when do I follow first approach? When it is not possible to gather information about expenses and revenues. It is not possible to me to collect the information. Okay, there is no possibility of preparing trading account and profit and loss account. Yes, sir. But under second method, I am collecting the information and this information can be converted into complete information and I am preparing final accounts. Means what? Trading account, P&L account, balance sheet. So under the first approach, no trading account is prepared, no P&L account is prepared. Only balance sheet is prepared. And this balance sheet is technically known as, under first approach, is called statement of affairs. Statement of affairs. There it is not called balance sheet, but it looks like the balance sheet. It is not called balance sheet. It is called statement of affairs, but statement of affairs looks like as balance sheet. Second one, conversion approach. Here we prepare trading, P&L and balance sheet. Is it clear? Now first we try to understand ascertainment of profit by comparison, capital comparison. First approach we follow. After completion of first approach, we solve some problems. After that, we go to conversion approach. So from examination point of view, which is most important, sir? From examination point of view, the conversion approach is most important. From examination point of view, the conversion approach is most important. Is it clear, students? Statement of affairs method, sometimes they ask. Conversion approach is very, very important. Is it clear, everybody? Yes, sir. Now come to ascertainment of profit by capital comparison. So under this approach, what we do, sir? Under this approach, what we do? To understand that, here I have given one example. Look at. See here, Mr. A started a fruit business with 10,000 rupees on the beginning of the day. The beginning of the day. This 10,000 is called opening capital. Yes or no? At the day of beginning, he started fruit business. He started fruit business, 10,000 rupees. This is called his opening capital. Opening capital. Now during the day, what he will do? He will sell all the fruits. He will sell all the fruits. And at the end of the day, he has some 15,000 rupees in his pocket. He has 15,000 rupees in his pocket. 10,000 rupees, with the 10,000 rupees, he started a business. At the end of the day, after selling off all the fruits, he has 15,000 rupees in his hand. In his pocket, he has 15,000 rupees. But at the beginning of the day, with how much amount I started? At the end of the day, I have sold all the fruits. How much amount I have in the pocket? 1,000. Now you people tell me, how the 5,000 rupees extra amount I got? From where I got this extra 5,000 rupees? Sir, by selling fruits, sir. From where I got this 5,000 rupees extra? Sir, by selling fruits, sir. Acha, this 5,000, in that case, this 5,000 rupees is your profit. This 5,000 rupees is your profit. Sir, how can you say 5,000 rupees is my profit, sir? Total 15,000 rupees my profit, sir. How total 15,000 rupees is your profit, man? Because you have invested in the business 10,000, na? That is your money, capital. Total 15,000 is not your profit. Only 5,000 is your profit. So here profit is calculated by comparing opening capital and closing capital. Try to understand. Here the profit is calculated by comparing closing capital and opening capital. Closing capital is 15,000 minus opening capital is 10,000. Observe carefully. So 5,000 rupees is your profit. This logic helps us to find the profit of a small businessman in which the expenses and incomes information is not available. Not available. Is it clear, students? Yes, sir. How the opening capital is calculated, sir? That is the question mark. Because it is a small businessman. It's a small business. That too, we have taken only one day activity. Here we have taken only one day activity. But normally, in our example business, our real time business is 1 year activity now. Is 1 year activity. For the year ended, we prepare, we calculate profit or loss. This is one day activity, students. This is one day activity. For example purpose, I have taken this. This is one day activity. Then what about 1 year activity? So here the task is how to calculate closing capital, how to calculate opening capital, how to calculate closing capital, how to calculate opening capital. Now the point comes accounting equation. Now the concept or point comes accounting equation. I need capital na? Yes. So accounting equation tells us assets is equal to liabilities plus capital. Assets is equal to liabilities plus capital. Now what we need? Sir, we need capital, sir. Capital is equal to assets minus liabilities. Over. Very simple. That's why I said when it is not possible to collect the information of expenses and liabilities, don't worry. Then you try to collect the information of assets, liabilities, and drawings, whatever it may be. Sir, it is not possible to gather information about assets and liabilities. Also, do one thing: don't calculate profit. See, one thing: you want to calculate profit or loss, you need nominal accounts information. That information is not possible. At least you have to gather assets and liabilities information. Na? If that is also not possible, how can you calculate profit? Yaar? How can you calculate profit? Bolo yes or no? Now, now, if you take the assets and liabilities at the beginning of the year, then you get opening capital or capital at the beginning of the year. If you take same assets and liabilities at the end of the year, you get the difference between assets and liabilities at the end of the year is nothing but capital at the end of the year. Capital at the end of the year. Yes or no, students? So here you have to prepare two statement of affairs. Because observe carefully, it's very logical, students. Here you need opening capital information, closing capital information. If you want opening capital information, you need to identify opening date assets, opening date liabilities. That is one statement of affairs. Second, you need closing capital. Na? For that purpose, you need to know closing date assets, closing date liabilities. Means you have to prepare another statement of affairs at the end. Means here you have to prepare two statement of affairs. One is opening statement of affairs, second one is closing statement of affairs. Sir, statement of affairs is nothing but what, sir? Statement of affairs is nothing but balance sheet. It looks like the form of balance sheet, but we should not call it as balance sheet, we call it as statement of affairs, which gives us information about, which contains information about assets and liabilities. If these assets and liabilities are at the beginning of the year, so we can calculate opening capital. If these assets and liabilities are relating to at the end of the year, we can able to calculate closing capital. Sir, assets and liabilities, na sir? Yes. So identify, sir, how can I identify assets and liabilities, sir? How can I identify assets and liabilities, sir? Very simple, man. Assets consist of fixed assets, current assets. Assets consist of fixed assets, current assets. In out of the current assets, first identify how much cash you have in the business. How much cash you have in the business, identify. How can I identify cash in hand, sir? Count the physical cash. How much cash we have, count it. Next, cash at bank, sir. Yes, look at the passbook. Look at the passbook, you can know cash at bank, na? Yes, sir. Oh, sir, closing stock, sir. Okay, at the end of the year, count the physical stock. You can count the physical stock, na? What's there in that? You can count the physical stock. Ah, yes, sir. Now debtors. Sir, debtors. How can I identify debtors, sir? Hello, man. You are maintaining debtors. Your business, your owner. The businessman is maintaining debtors account na, take the list of debtors and amount due from them, it becomes total debtors. Hope you guys are following. Next, how can I get information about fixed assets, sir? Ask the proprietor. Hello, proprietor, come here. Do you have any land owned by you? Ah, yes, sir. What is the value of that land? This much. Sir, where is the evidence, sir? Land document, land and building. Do you have any plant and machinery? See them physically and value it. Do you have any furniture and fixtures? Yes, sir. See them physically and value it. Do you have any motor vehicles? Like this, you try to identify and ask the proprietor one by one information and value them. Like this, you get assets information. And after that, ask the proprietor, do you have any bank loans? Yes, sir. Get that bank statement, loan statement or repayment schedule. Next, do you have any creditors? Yes, sir. I maintain creditors ledger, sir. Take this creditors ledger, sir. You make a list of creditors and what is the amount due to them? Total creditors. Yes, sir. This becomes total creditors. That's it. The difference is nothing but capital. If this statement of affairs is prepared at the beginning of the year, then it becomes opening capital. If this is prepared at the end of the year, then it becomes closing capital. So, by preparing this statement of affairs, what we are able to find out, first one, opening capital. Second one, closing capital. We are able to find out, opening capital and closing capital. This is first step. What is first step? Tell me. Identifying opening capital and closing capital, or calculating opening capital and closing capital. Observe here. Ascertainment of profit under two stages. Stage 1, stage 2. Stage 1 is what? Preparation of statement of affairs at the beginning and at the end. We understood only, we have calculated only opening capital and closing capital. Now we try to compare opening capital and closing together. together. So for that we prepare statement of profit or loss. To calculate profit or loss, now we prepare statement of profit and loss. I understanding this statement of profit or loss is very very important, students. For this, here I am taking some concept from preparation of final accounts of non-manufacturing entity or manufacturing entity, whatever it may be. In the balance sheet, in the balance sheet, this is statement of affairs. We understood. Now come to statement of profit and loss. Sir, how can this statement of profit and loss is prepared? Okay, just visualize the balance sheet, original balance sheet. Visualize sole proprietor balance sheet. Okay, let us take some example. For example, 2024-25 balance sheet. In the balance sheet, first what we write? Capital. Capital. So this capital is nothing but opening capital, students. Opening capital. If you want, you can open your final accounts chapter problems and see that capital. To this, what we are adding? Sir, additional capital we are adding, sir. Because of additional capital, our capital balance will increase. Next, net profit. Because of net profit, our capital balance also increase. Yes, sir. So this is the total capital now. Minus drawings. Because of drawings, our capital becomes increased now. Next, any life insurance premium of proprietor paid by the business. Because of this, also our capital balance will decrease. And in case of net loss, also our capital balance will decrease. Case of net loss, also our capital balance will decrease. Hope you guys are following. Yes, sir. Now observe this. After doing all this calculation, after doing all this calculation, we are getting closing capital. At the beginning, this is opening capital. This is opening capital. To this, we are adding additional capital introduced during the year and any net profit. From this, we are deducting any drawings or life insurance premium of the proprietor or any goods withdrawn by the proprietor. All these are deducted from capital. At the end, what we are getting? Closing capital. At the end, what we are getting? Closing capital. Dear students, sir, tell me statement of profit and loss, sir. Why are you explaining this balance sheet, sir? Ah, our statement of profit and loss lies in this balance sheet. Sir, what are you saying, sir? Yes, student. Now, will you do one thing? Convert this information into an equation. Will you convert this information into an equation? सर ऐसा कैसा सर मुझे को नहीं मालूम सर पता नहीं सर अरे look at यार here at the end what did you get closing capital now look at look at how can we write the above information into equation. Look at closing capital how did you calculate means sir first I have written opening capital sir opening capital one is opening capital. Next, to this I have added additional capital, sir. Okay, additional capital. Next, I have added net profit, sir. You take either net profit or loss. That's it. So here I am taking net profit. Sir, I have added net profit, sir. Third one. Total amount we get. Total amount we get till now. Total amount we get minus what we have deducted drawings. So this is the fourth one. Drawings made during the year. And any life insurance premium or something paid or any goods withdrawn by the proprietor, all these also becomes a drawings. Fifth one. So from this 1 2 3 add 4 and 5 deduct what you are getting closing capital. What you are getting closing capital. Yes sir. Now if you observe this equation now, here ultimately what we need from this equation net profit. Follow students. What we need net profit. Take the net profit aside. Take the net profit aside. Yes, sir. Net profit. Now see the remaining equation. So net profit you bring one side and write down the remaining into other side. So how you are getting? So net profit we have placed now. So remaining all items you take it to the LHS or RHS side, whatever it may be. The equation becomes now closing capital plus drawings plus life insurance premium minus opening capital minus additional capital. Equation LHS is equal to RHS. You need to apply that knowledge. Ah, finally, this is the equation which we need. Net profit calculation. Net profit calculation. Now do one thing. This equation convert into statement. This equation convert into statement. Sir, how can I convert this equation into statement, sir? Very simple. What is the requirement? What you are trying to calculate, sir? I am trying to calculate net profit, sir. Put the heading statement of profit or loss. Net profit or loss, whatever it may be. Statement of profit or loss. Okay, sir. First, what you have written, sir? I have written closing capital, sir. You also write the same closing capital. Second, what you have written drawings, sir. You also add drawings. Plus, na add. Sir. Third, I have written life insurance premium, sir. You write the same third one, life insurance premium. Total it. After that, sir, I have deducted opening capital, sir. Fourth one, opening capital. Sir, I have deducted additional capital, sir. Fifth one, additional capital deduct. See, I am just doing whatever there in the equation. I am preparing a statement. Now, automatically you get a net profit. Automatically you get net profit. If this amount is negative, na, if this amount is negative, it is net loss. This amount is positive, it is if this amount is positive, it is net profit. If this amount is negative, it is loss. That's it. Very simple. Very simple. Look at here as an accountant, we are simply applying our technique. As an accountant, we are applying the technique. Technique we are applying. Hello, observe here. So under statement of affairs approach, we try to calculate profit or loss of the business in two steps. First step, by preparing statement of affairs. Sorry, just a minute. First one, statement of affairs at the beginning and at the end. Clear? So from the first step, we get opening capital, closing capital. Next, we prepare statement of profit and loss to know the profit or loss of the business. Statement of affairs is prepared like this, and statement of profit is prepared like this. To understand how this statement of profit and loss came, I have given these things. First, I have given balance sheet. This we understood already in case of profit preparation of final accounts of sole proprietorship. From this information, balance sheet information, I have framed one equation. From this equation, I have taken net profit. Now the second equation is converted into statement. See, if I tell straight away the statement, it becomes by heart. I don't want you people to by heart the statements or any accounts or any formulas, anything. So here I am explaining how this statement came. Is it clear? Now, if you prepare this statement, finally you get profit or loss at the end of the year. And do understand one thing, the profit or loss which we have calculated by following this approach, it is useless. It is useless. This approach cannot be approved any entity or any banks who is giving who is granting loans, or income tax department will not accept this type of profit calculation. Why, sir? Because to calculate the profit or loss, this is just estimation based. This is not a exact profit or accurate profit. This is just estimated profit. The assets and liabilities which we have gathered is estimated, not actual assets and liabilities. No, original values. Not they are not at a historical cost now. Understood, everybody? So that's why this approach will help the proprietor only to understand whether his business is earning profit or loss. And this profit now which we have calculated may not be correct. May not be correct. This profit may not at all correct. Why? This is just estimated, not exact, not accurate. Because we have not prepared any trading account. We have not prepared any profit and loss account. We have just prepared statement of affairs, and from there we prepare statement of profit loss. Is it clear, students? So that's why we need another approach, that is conversion approach. Now what we do after completion of this, watch the video again if you want. Otherwise, just revise the concept once. Revise this concept. Whatever we have discussed, the same thing is here. Whatever there, we have discussed the same thing. Okay, so you just observe this one by one. After completion of this concept, now go to problem section. There complete all the problems on this statement of affairs approach. After that, we come to conversion approach. From examination point of view, this conversion approach is very, very important. So many students, they get confusion in this conversion approach. To understand this conversion approach, now you need full knowledge of accounting, full knowledge of accounting side. Here, so first try to complete the problems on statement of affairs approach. Then after we go to conversion approach. Is it clear, students? Yes. So if you have any doubts, you can ask me. Right? You can send a message. Hello, students. In the previous videos, we have discussed statement of affairs method of calculating profit or loss of the small business organization. Now, we understood that the profit which we have calculated by following this method may not be correct. May not be correct. At the same time, this profit calculation approach cannot be accepted by the government, means income tax departments. At the same time, banks also will not accept this type of approach of calculation of profit or loss. That's why now we are going to uh, understand another approach of calculating profit or loss of these small business organizations, that is conversion approach. That is conversion approach. This is very very important from examination point of view. Not only from examination point of view, but also from practical point of view also we do the same. Because once you start practice now, so many business people will approach you. Out of them, some business people, some small scale business people also may approach you, who may not maintain proper books of accounts. In that case, how do you calculate the profit or loss of the business? That is the question mark. Yes or no? Yes. Now look at conversion approach. Under this method, what we do? First, whatever the information available from the proprietor, we try to collect maximum information. We try to collect maximum information. After collecting maximum information, now what we do is we start recording the transactions. We start recording the transaction. Observe carefully. Basic understanding of conversion approach is very very important. Now, first we have collected information from the businessman or proprietor, and that information is recorded in the books of accounts. Yes sir, I have recorded the transaction in the journal. All transactions first we record in the journal. Okay. After that, we post them into ledger accounts. We create various ledger accounts and we post into ledger accounts. Posting, casting and balancing work is completed. Now the next work we do is unadjusted trial balance. Same approach we follow. After that, adjusting entries we record. Okay. After that, we prepare adjusted trial balance. Very good. After that, we prepare financial statements. Nothing but trading account, profit and loss account and balance sheet. Now whatever the financial statements we have prepared here, we have prepared now, they are accepted by the banks, at the same time government also. Why sir? Because I have followed double entry system to maintain the books of accounts of this proprietor. Earlier they have not recorded the transactions properly, but now I have collected various information from the proprietor and I have recorded the transaction in the journal. Next, the same is posted into ledger. After that, I have prepared unadjusted trial balance, adjusting trial balance, adjusting entries, adjusted trial balance. After that, I have prepared final accounts. Now, while doing this accounting cycle, while following this accounting cycle, we have to use our accountant techniques also. Why? Because here it is not possible to gather complete information. I repeat, some information may be missing. Some information may be missing. So suppose the proprietor, he doesn't know that how much depreciation is provided. He knows that he has paid interest to the bank, but he doesn't know how much interest is outstanding as on 31st March. He paid rent. He paid rent. But at the end of the year, what we have to see, we have to check whether any whether any rent is outstanding or not, whether any outstanding expenses or not. All these techniques we have to follow. Is it clear, students? So practically what happens, tell me. First, think practically. We gather information from the proprietor. We record the transactions in journal, ledger, trial balance, then after final accounts. But you people tell me, in the examination problems, what they give you? Sir, in the examination problems, what they give you, sir? Very simple. Look at. Look at illustration 8. Just a minute. Yeah. Look at illustration 10 once. Illustration 10. So here they have given some information. Okay, opening date assets and liabilities, closing date assets and liabilities, and after that some cash transactions, and after that some other information they have given. The same information we gather practically. We gather the same information, and the same information is given here. Now what you have to do, actually you have to record the transactions in journal. Out of this this information, you have to record the transactions in journal. Next, you have to post them into ledger. Next, you have to prepare trial balance. After that, you have to prepare final accounts. But you people tell me, in the examination problems, will you follow that accounting cycle? No, sir. No. In the examination problems, directly, straight away, we prepare final accounts. Means we will not record any journal. We will not record any, we will not post into various ledger accounts. No. No balancing, no casting, nothing. No trial balance at all, first of all. No trial balance. But straight away, what we are doing? We are preparing the final accounts. Straight away, we are preparing the final accounts. In that case, how do you prepare final accounts from this information directly? That we need to understand. Actually, to prepare the financial statements or final accounts, we need trial balance. But here, it is not a trial balance. Here, it is not a trial balance. Observe, it is just the raw information. That's it. It is just the raw information. Yes or no? Yes, sir. From this raw information, straight away we have to prepare financial statements. Right away, we have to prepare financial statements. So, what is the approach we follow to prepare the financial statements or final accounts from this raw information? Yes, sir, no, students. Understood this basic idea behind conversion approach? Yes, sir. So, I repeat, first, they give you the information. Practically, what we do, we record the transactions in journal, next posting, after that casting, balancing, after that trial balance, after that remaining everything, final accounts. But now what happens? We are not going to, the same information is given in the examination problem, but we are not going to record them in the journal, we are not going to repost them into ledger, and we are not going to prepare trial balance. Is it clear? But straight away we are going to prepare trading account, P&L account, and a balance sheet. So what is the approach we have to follow? What is the process we have to follow to solve this type of problems in the examinations? Is it clear? Yes, sir. So for that we have to follow some process. What is that, sir? First look at. So here, first, what is the requirement? Identify. What is the requirement of the problem? Preparation of trading account, and preparation of profit and loss account and balance sheet. These three things we have to prepare. Now, draw the statements or formats of these three requirements: trading account format, profit and loss account format, and balance sheet format. Okay, now look at, suppose here I am preparing trading account format. Trading account format I am preparing. To prepare trading account, which information you need, tell me? Because already we have prepared final accounts of sole proprietor. Now tell me, to prepare trading account, which information you need? Sir, I need opening stock, sir. Next, I need purchases, sir. Purchases. Purchases are cash purchase, credit purchase. Sir, from this I will deduct purchase returns, sir. Purchase returns are deducted. Next, sir, we need direct expenses information, sir. Direct expense information. Yes, sir, correct. After that, we need information of sales. Sales, again, cash sales, credit sales, minus sales returns are deducted. Sir, next we need information of closing stock, sir. Information of closing stock. So to prepare a trading account, this is the information you need. So after that, we get the balancing figure, either gross profit or gross loss, whatever it may be. To gross profit or gross loss. Yes, sir, no, students? Yes, sir. Okay, fine, sir. Now, here the problem comes from where you get this information. I will tell you, look at. First, opening stock information is given in the problem straight away. I will show you. You can observe problem number 10. See, 31st March 2021, 31st March 2022. Opening, closing. Here we have inventory information. Opening, closing. Nothing but this 1,10,000 is nothing but opening stock. This 1,90,000 is nothing but closing stock. The same information you can present here. Yes, sir. Now, next purchase information you need. You need cash purchase and credit purchase. Cash purchases sometimes they give you in the problem straight away. But most of the cases they don't give you credit purchases. Most of the cases they don't give you credit purchases. Sir, if they don't give credit purchases, then what we have to do? Simply calculate credit purchase. Calculate credit purchase. Sir, how can I know how much of goods I purchased on credit, sir? Okay. From whom you purchase goods? Sir, from creditor, sir. I purchase goods, sir. Very good. Then go and prepare creditor's account. Go and prepare creditor's account as working note. Are you able to follow? If you don't know how much goods purchased on credit, then go and calculate. Sir, how can I calculate, sir? Credit purchases means from whom we purchase goods on credit, sir, from creditors, sir. So if you prepare creditor's account, automatically whatever the balance we get in the creditor's account, that information is nothing but credit purchases. Sir, preparation of creditor account means what, sir? Creditor account contains opening balance, credit, closing balance. At the same time, during the year, how much amount we paid to the creditors. During the year, how much discount we received from creditors. During the year, how much goods we returned to the creditors. During the year, how much bills we accepted on behalf on favor on bills drawn by creditors. So if you know all this information, then automatically you can prepare creditors account. Yes, sir. So credit purchases, you go and calculate. Next, direct expenses information is given in the problem directly. You identify, okay, this is direct expense and write down. Next, sales information. Cash sales, sometimes they give you directly in the problem. Or otherwise, you have to calculate how much cash sales. How much cash sales made during the year. At the same time, credit. Sorry, how much goods we sold on credit. This information they will not give you straight away. What we have to do? We have to calculate. To whom we sell goods on credit, sir? To the customers, sir. Who are the customers, man? Sir, customers are nothing but debtors, sir. Go and prepare debtors account first. Go and prepare debtors account first. By preparing debtors account, calculate credit sales made to them during the year. Yes or no? Sales returns directly given in the problem. Closing stock also directly given in the problem. So once you prepare creditors account, you get credit purchases, substitute that amount in the trading account. Once you prepare debtors account, you get credit sales information, substitute that amount in the trading account. Finally, you get gross profit or gross loss. This gross profit is or gross loss is taken to the profit and loss account. Here I am continuing profit and loss account. Okay, by gross profit. Assume in this problem we got gross profit. It is gross loss. Credit side we write as gross loss. The same is taken to the debit side of P&L account. Yes or no, students? Yes, sir. So final accounts knowledge is very, very important here. Next, debit side what we write? Debit side we write all revenue expenses. Paid we write less. Payable also we write outstanding expenses. Credit side what we write? By incomes. Other incomes received in cash plus still receivable. We write both the amounts now. Why? Because we are following accrual concept. We are following accrual, not cash system now. We are following accrual system. Means regarding to expenses, whether they are paid or payable, not paid. If they are pertaining or relating to the current year, then we have to show them fully, whether they are paid or still payable. In respect of incomes, if this income is relating to the current year, let us say current year 2024-25, if that particular income is received or receivable, forget about that. First, show it in the P&L account. Clear, students? After that, we get net profit or net loss. Credit side is more than debit side, then it is net profit. If debit side is more than credit side, then it is called net loss. Sir, this revenue expenses information, how do we get, sir? In the problem you get, you identify which is revenue expense and which is revenue receipt. Identify and write down. And write down here. And this profit or loss is taken to the balance sheet straight away. Observe carefully. Here I am preparing balance sheet. Balance sheet. We finally came to balance sheet. So in the balance sheet, what is the first item, sir? First item is capital, sir. This capital is nothing but what? Opening capital, sir. Capital is nothing but what? Opening capital. Yes or no? Visualize the balance sheet. In the balance sheet, first and foremost thing we write is opening capital. Sir, opening capital, it is not given in the problem, then what we have to do? If it is given in the problem, take it as it is. It is not given in the problem, then what we have to do? Go and prepare opening balance sheet. Sir, if opening capital is not given, then what is the necessity of preparing opening balance sheet, sir? See, opening capital means capital is nothing but the difference between assets and the liabilities. The difference between assets and liabilities is nothing but capital. That's what we did in statement of affairs method, na? That's what we did in statement of affairs method. So if opening capital is not given, then go and prepare one working note, that is opening balance sheet. In the opening balance sheet, what we show? All the assets at the beginning of the year, at the same time all the liabilities at the beginning of the year. I will show you in the problem. Look at illustration 10. Here if you observe 31st March 2021, 31st March 2021, on this date we have these current assets and current liabilities information. Look at debtors, current asset, bills receivable, current asset, bills payable, current liability, sundry creditors, current liability, inventory, current asset, bank, current asset, cash, current asset. This is current assets information. Place these opening items in the appropriate place. Asset side, liability side. The balance sheet means we also have some fixed assets and long-term liabilities, na sir? Why not? You can identify the information in the problem. You identify the information in the problem and place them in the opening balance sheet. This problem is very, very logical. To put it simple, it's a mind game. This conversion approach is a mind game, students. Mind game. Hope you are following. Yes, sir. Now look at. So opening capital I have written. To the opening capital, what we add? Additional capital. Sir, additional capital, identify in the problem. If it is there, okay. Otherwise, ignore. Minus net profit. Net profit is calculated in profit and loss account now. Yes, sir. Next, minus drawings. Did you remember? Same final accounts of sole proprietor. Final accounts of sole proprietor. Same strategy. Final accounts of sole proprietor. Same strategy here. Minus drawings. Minus any life insurance premium paid or any goods withdrawn by the proprietor. Minus any interest on drawings. Any interest on drawings. Here you may add any interest on capital. Any interest on capital. Yes, sir. No, students. Yes, sir. Like this we prepare. Finally, what we get? We get the closing capital. We get the closing capital. After that, come to balance sheet. Balance sheet, we write first fixed assets. Identify in the problem what are the fixed assets. Minus Don't forget to deduct depreciation. On any asset, if we have any depreciation, that is deducted here. Okay. Next one, current assets. Okay. If you have any investments, write down investments. Next, current assets. Current assets. If you see in the problem number 10, here we have, look at various current assets we have on 31st March 2022. Nothing but closing date. 31st March 2022 is the closing date. Observe. On this date, whatever the assets and liabilities we have, take them to closing balance sheet. Opening balance sheet working note, students. Opening balance sheet working note. Right. Now, current assets. So you prepare. So current assets nothing but closing stock. Closing stock. At the same time, debtors. At the same time, bills receivable, cash at bank, cash in hand, or any prepaid expenses. Any prepaid expenses. All these are our current assets. Identify in the problem and do it. That's it. This is our flow of preparing trading account, profit and loss account, balance sheet. In addition, these three main requirement of the problem, we have to also prepare creditors account as working note, compulsory working note for creditors. Either to know opening balance of creditors or closing balance of creditors or goods purchased during the year. Compulsorily, here you will get some missing amounts or missing items. Compulsorily. If you have the trial balance and some adjustments, right away you can prepare a trading account, P&L account and balance sheet. But here you are not having trial balance. You are having only information. From this information, out of this information, some information may be missing. The challenging task in this conversion approach is to identify the missing amounts. Unless you identify the missing amounts to complete these financial statements, it is not possible to complete these financial statements. To know the missing amounts, we need to prepare working notes. So what are the compulsory working notes we prepare? Creditors account, debtors account, opening balance sheet. Opening balance sheet is prepared only when the opening capital is not given. If opening capital is given straight away, then you need not to prepare opening balance sheet. In addition to that, we also prepare cash book. Cash book also we prepare. In addition to that, we also prepare bills receivable account and bills payable account. These are the main accounts or main working notes which we prepare in addition to the requirement of the main problem. Main problem is nothing but answer trading account, P&L account and balance sheet. In addition to these things, we also prepare working notes. Creditors account, debtors account, cash book is compulsory. If bills receivable is there in the problem, prepare bills receivable account. If bills payable is there in the problem, prepare bills payable account. At the same time, if opening capital is not given, then prepare opening balance sheet. Opening capital is not given, then prepare opening balance sheet. Yes or no, students? Now we try to understand how these working notes are prepared. That we need to understand. See, here you can observe that there is a relation between creditors and bills payable. Observe. There is interlink between creditors and bills payable. At the same time, there is linkage between debtors and bills receivable. Debtors and bills receivable. There is a linkage. So here, whenever you are preparing the working notes, you have to link between two working notes. Creditors, bills payable. Debtors, bills receivable. Is it clear, students? Yes, sir. And one more thing. Whenever you are solving the problem, each item may be recorded in the two places. Each item may be recorded in the two places. Sir, what are you talking, sir? I will explain with one example. Okay, see, here we have sundry debtors. How much sundry debtors we have? 70,000. Now, sundry debtors opening balance, na? Yes, sir. If opening capital is not given, then we prepare opening balance sheet, na? So here we write debtors 70,000. One place we have written. At the same time, we prepare debtors account also, na? So debtors account, we write 70,000 as opening capital. Two balance brought down. 70,000. Two places. Yes or no? Closing balance also. See, here we have closing balance 92,000. This 92,000 is shown on the assets side of closing balance sheet plus debtors account closing balance. So debtors account working note closing balance by balance C by D. Like this, don't forget to write each item in two places. Sir, why you are saying two places, sir? Why? Because when you record a transaction in the journal, I repeat, when you record a transaction in the journal, you post them into ledger in two places. Na? Suppose capital contributed, cash account debit to capital account. This is the entry we record in journal. The same entry we post into ledger. We open cash account at the same time capital account. Cash account debit side we give posting, capital account credit side also we give posting. Yes, sir. No student. Yes, sir. But here we are not recording journal entries. We are not preparing ledger accounts. We are not balancing them, and we are not preparing trial balance. Ah, yes, sir. That's why when you are solving a problem on incomplete records like this conversion approach, don't forget to show each item in two places. In two places. While solving the problem, also I will explain which item is shown in which accounts. Two places. Is it clear, students? So, incomplete records problem solving approach is very, very important. Now, we try to understand what is the linkage between creditors account and bills payable account. What is the linkage between debtors account and bills receivable account? How this opening balance sheet is prepared? How the cash book is prepared? And what is the linkage between cash book and other working notes? Suppose cash received from debtors is given. Cash received from debtors. Can you tell me the entry? Sir, cash account debit to debtors account, sir. Okay. Here you are preparing cash book, na? Yes, sir. Cash book debit side give posting. Sir, debtors account also we are preparing, sir. Okay. Debtors account give posting on credit side. Here we are not going to prepare all ledger accounts. No. Some important ledger accounts only we are going to prepare. Some important ledger accounts only we are going to prepare. Hope you guys are following. So this accounts from incomplete records is going to be a mind game problems. Here, so here our final objective is what? Preparing trading P&L balance sheet. But while preparing this trading P&L and balance sheet, we get compulsorily some missing items, missing amounts. To know missing items, we prepare working notes. Now we try to understand first how to prepare these working notes and what might be the missing amount. Try to understand. See, in each problem we get different missing items. Different missing items. In one problem, suppose credit purchase is the missing item in one problem. In some problems, cash purchase may be the missing item. In one problem, credit sales may be the missing item. But in other problems, cash sales may be the missing item. Is it clear? So different problems may have different missing items. That we need to understand now. Is it clear, students? Yes, sir. Now try to revise this concept once. See, here conversion approach is given. Whatever we have discussed, you can find here. Now we start understanding the preparation of working notes and try to relate between one working note with other working note. Is it clear, students? Yes, sir. So concentrate, and if you have any doubts, you can send me your doubts to my WhatsApp number or Telegram number, okay, which is provided to you. Clear, students? Hello, students. In the previous video, we have seen that how the conversion approach is followed. Now, in this video, we try to understand how the working notes are prepared. How the working notes are prepared. First, look at here. Preparation of financial statements. So here, what are the things we have to prepare? Generally, the following steps are followed to prepare the financial statements. First, prepare the formats of trading account, P&L account, and balance sheet. After that, one by one working note. We have already discussed now. First, prepare cash book, cash and bank summary. After that, prepare total debtors account, bills receivable account. Next, total creditors account, bills payable account. Here, there is a linkage between bills receivable account and debtors account. At the same time, there is a linkage between creditors account and bills payable account. What is this link? We try to understand in this video. Next, prepare an opening statement of affairs. Opening statement of affairs is nothing but opening balance sheet to calculate opening capital. And this is prepared only when we don't have the information about opening capital. Otherwise, you need not to prepare. Next, any other account if required. Suppose if any information missing in the about the fixed asset, so any particular asset, building or plant and machinery or furniture, whatever it may be, you just prepare that particular account so that you get the missing amount. Clear? So these are the working notes. Main answer is trading P&L and balance sheet. Working notes are these things. Clear, students? Yes, sir. Now, first we try to understand preparation of total creditors account and bills payable account. To understand this, first we try to understand what are the transactions between a creditor and business. We are business. We purchased goods from our suppliers on credit. Now the relationship exists between our business and our creditor. The relation between the transaction, the first and foremost transaction is credit purchases from the creditor. Credit purchases from the creditor. This is the first and foremost transaction. Yes, sir. Goods purchased on credit. Next, we may pay cash or we may issue checks to the creditor. Na? Yes, sir. In that case, cash paid to the creditor during the year. This is one a transaction. These are all probable transactions between a creditor and a business. It is not, I'm not saying that all these transactions will happen between a creditor and a business. No. Out of this, some transactions may happen, not all. Next, our creditor may give some discount to us. For us, it is discount received, and for that creditor, it is discount allowed. So, discount and other concessions obtained from the creditor. Next, due to any reason, we may return sometimes the goods to the creditor. Purchase returns or returns outward. Purchase returns or returns outward. Next, our creditor may draw a bill. Our creditor may draw a bill. We accept in favor of our creditor. So, bills payable accepted. On the due date, we pay the bill na, or we honor the bill na? Yes, sir. So, bills payable honored. So, here you can write bills payable honored. Bills payable honored. Next, on the due date, sometimes we may dishonor the bill. On the due date, if we don't have money, in that case, the bill is said to be dishonored. So, the bills payable dishonored. After doing all the, after recording all these transactions and posting into creditor account, the creditor account shows now closing balance. The creditor account shows closing balance at the end of the year. Now, the same closing balance becomes opening balance in the next period. Yes or no? The closing balance of one period or 1 month becomes the opening balance for the next month or the closing balance at the end of the year in the creditor account may become the opening balance in the next financial year. That is nothing but opening balance of the creditors. Like this, these are the variable transactions between a creditor and our business. Probable transactions, do remember. These are the very probable transactions between a business and its creditor. Now, these are the transactions. Now, visualize the entry in your mind. Accordingly, post into creditor account and bills payable account. Simple creditor account and bills payable account. Now, observe first opening balance. Creditor account shows which balance? Credit balance. So, this is the opening balance. First one, opening balance. Opening balance by balance carried down. Next, goods purchased on credit. What is the entry we record? Purchases account debit to creditor account. So, by credit purchase. By credit purchase. Yes or no, students? Yes, sir. Next, bills payable accepted. Bills payable accepted. What is the entry for this? Creditor account debit to bills payable account. Here you have to apply the knowledge of bills of exchange. So, creditor account debit to bills payable. Third one. This first one. This is second one. And this is third one. Okay. Next. Bills payable dishonored. In case of bills payable dishonored, what is the entry we record? Bills payable account debit to creditor account credit side by bills payable dishonored. Next, and when we accepted a bill now, the same becomes posting the same we may post into bills payable account. So bills payable account debit by creditor account. Observe, this is third one. And bills payable account shows some opening balance now. Bills payable is a liability, so it shows opening balance, so by balance brought down. Next, bills payable dishonored now. For dishonor of bills payable entry, bills payable account debit to creditors account. Creditors account. To get to bills payable. Next one, bills payable dishonored. Over. Now bills payable honored. What is the entry for bills payable honored? Bills payable account debit to cash or bank account. So bills payable account debit side to cash or bank. Bills honored. Next, cash paid to creditors. Simple. Creditors account debit to cash or bank account. See, cash paid. Next, discount and other concession received. Simple. Creditor account debit to discount received account. So to discount received. Finally, goods returned to the creditors. What is the entry for goods returned to the creditors? Creditors account debit to purchase returns or returns outward account. So to purchase returns. Observe the account. Now, closing balance. The creditors account generally shows credit balance. Means credit side is more. When you are writing opening balance, now we present the opening balance as by balance B by D on the credit side. But when you are presenting opening balance, so closing balance, now then we have to show it on the debit side to balance carried down. Closing balance carried down means closing balance. P by D brought down means opening balance. The same closing balance can be brought down to the next financial year or next period. That becomes the opening balance. Is it clear, everybody? Oh, apart from this, we may receive bills receivable endorsed to creditor. Endorsed to creditor. In bills of exchange chapter, we have discussed third option, na? Bills endorsed to creditors. Whenever we endorse the bill to the creditors, what is the entry we record? Simple. Bills payable account debit to bills receivable account. Bills payable account debit to bills receivable account. Yes or no? Or creditors account debit to, sorry, creditors account debit to bills payable account. Just a minute. It is my mistake. Creditors account debit to bills receivable account. To bills receivable account. So creditors account debit side. Creditors account debit side write down to bills receivable account. So here you can write to bills receivable. Okay, to bills receivable. Sometimes the same bills receivable, whatever the bill we endorse it to the creditor, that may become dishonored. Na? I repeat, Mr. A has given a bill to us. We have endorsed the same bill to our creditor C. Whenever we endorsing the bill, then what is the entry we record? Creditor account debit to bills receivable account. Creditor account debit to bills receivable account. Now, when the endorsed bill is dishonored, then what is the entry we record? Debtor account debit to creditor account. Why? Because at the time of dishonor of bill, now we have to receive amount from debtor. The same amount we have to pay to the creditor now. Earlier we endorsed bill. That bill was dishonored now. Now we have to pay amount to the creditor. So we have to collect the amount from debtor and we have to pay amount to the creditor. What is the entry we record? Debtor account debit to creditor account. So creditor account debit side by debtor's account. These are very, very important transactions. These are very, very important transactions. Observe carefully. Like this, the creditor's account is prepared. Ultimately, when you balance the creditor's account, sometimes the missing figure may be opening balance. Sometimes the missing figure may be opening balance. Sometimes the missing figure may be credit purchases made during the year. Sometimes the opening balance may be closing balance of creditor. Sorry. Sometimes the balance in creditor's account may be closing balance of creditors. These are the three possible missing items. I have prepared a total creditors account, but I don't have information about opening balance. Opening balance. In that case, the credit side of creditors account is more than debit side. Sorry, the debit side of creditors account is more than credit side, means we have opening balance credit. Sometimes credit purchase information is not given. Credit purchase information is not given. Then get what happened? Debit side of creditor account is more than credit side. Means credit side you are getting some balance now. Credit side you are getting some balance. Nothing but what? Credit purchases made during the year. Sometimes now the credit balance is more. That means credit side of creditor account is more than debit side. That becomes closing balance in the creditor's account. I have told you three things. See, right? See, first, if credit is more than debit, what is the possible missing item? The possible missing item may be closing balance. Closing balance in creditor's account. Second possibility, if debit side is more than credit, if debit side is more than credit, the possible missing items may missing item may be opening balance of creditor. Opening balance of creditor. If it is not there, if the opening balance of creditor is not there, obviously the missing figure may be opening balance of creditor. Third, if debit balance is more than credit, the possible missing item may be goods purchased on credit. Goods purchased on credit during the year. These are the possible things. Observe carefully. If credit side of creditor account is more than debit, then the possible missing item may be closing balance in creditor account. Like that, if debit balance is more. In the problem you observe, normally here we understood what are the probable transactions between debtor and sorry, business and creditor. Now you observe the account of creditor. After preparing the account of creditor, you just observe which information is missing. Which information is missing. Based on that, you assume the missing item is that missing item. The missing item may be this one. Suppose debit side is more than credit. Debit side is more than credit. Check the credit side whether opening balance is given or credit purchases given. Sir, credit purchase given, sir. Then which is the missing item or what is the missing item? Opening balance of creditors. Sir, credit side is more, sir. Then check the debit side. What are the things are missing? Whether cash is paid given or discount received given, bills payable accepted given, or purchase returns given or not, or closing balance is given or not. If all the informations are given, identify which is the missing information. That will help you to solve the problem. See, the purpose of doing working note is not just to prepare the account. By preparing this account, we identify some missing amount which helps us to complete our trading account, P&L account and balance sheet. That is the purpose of preparing these working notes. Okay. Next, bills payable account. Observe. When you have creditors account and bills payable account in the examination problem. Suppose in one problem we have creditors plus bills payable. Two accounts we have open. In some problems now only creditors account is there. In some problems not only payable account. Compulsorily you will get creditors account. One thing. Next, bills payable. If you get two accounts now, first check the bills payable account. Unless you close bills payable account, don't go to creditors account. Sometimes the missing figure of bills payable account may affect the creditor account. Logic is simple. Why, sir? See, we have posted all the transactions into bills payable. We have posted the transactions relating to bills payable. Okay. Now the question comes, what is the missing item in the bills payable account? What is the missing item in the bills payable account? Observe the transactions here. It is opening balance. It is opening balance. And it is bills accepted by us during the year. During the year. Debit side, bills honored, bills payable honored. Next, bills payable dishonored. Next, closing balance. All information is there, but closing balance is not there. Then whatever the missing item we have in the bills payable account, that becomes closing balance of bills payable. At the same time, all information is there, but opening balance is not there. Then assume the missing figure as opening balance. Now, all information is there, but total creditors means bills accepted during the year is not known. Then assume it is nothing but bills accepted during the year. Bills accepted during the year. Is it clear, everybody? Now, after identifying how much of amount of bills accepted during the year, the same is transferred to the debit side of the, observe here, this is shown here now. Bills accepted during the year. What is the entry we record? Creditors account debit to bills payable account. Creditors account debit side, bills payable account credit side. If total bills accepted during the year is not given, we have calculated. This amount will also affect the creditors account. That's why when you get total creditors account and bills payable account in the problem, first balance the bills payable account. After balancing the bills payable account, then come to creditors account. This is the linkage between total creditors account and bills payable account. Sometimes all information is given in the bills payable account, but bills dishonored information may not be given. Sometimes the missing amount may be bills dishonored or bills honored. Which information is missing, sir? That depends on problem to problem. Sir, in the creditors account, which information is missing, sir? That depends on problem to problem. In all problems, the same information missing? No. The information may be anything. Anything. Is it clear, students? So by hook or crook, we have to prepare this total creditors account and bills payable account. Total creditors account and bills payable account. By preparing total creditors account and bills payable account, you identify the missing amounts, and those missing amounts can be taken to the final accounts. Is it clear, students? So based on this concept, we have some problems. Check those problems first. After that, come back to the next concept, that is preparation of total debtors account and bills receivable account. Here we try to understand total debtors account and bills receivable account. What is the linkage between total debtors and bills payable accounts? We try to understand. Is it clear, students? Yes, sir. Hello, students. In this video, we try to understand the linkage between total debtors account and bills receivable account. First, to understand this, let us try to first focus on what are the probable transactions between business and its debtor. First of all, how the relationship between business and its debtor exists or starts. Sir, by selling goods on credit, sir. If I sell goods for cash, if I sell goods for cash, what happens? Tell me. Debtor will pay amount to me. Debtor will pay amount to me, and I will deliver the goods to him. With that, there is no relationship between me and customer. But when I sell goods on credit now, then the relationship between business and debtor exists. That is a starting point for the relationship. Okay, now look at what's the first and foremost transaction: goods sold to them on credit. Now, you people tell me, during the year, we may receive amount from customers, cash or check, whatever it may be. So, cash received from them, cash or checks, right? Cash or checks are received from the debtors, and debtors may return goods to us. As we return goods to the creditor, debtors may return goods to us, means sales returns. That is one more transaction, and we allow some discount to the debtors, na customers, na. So that is nothing but discount allowed to customers, discount allowed to customers or debtors. This is one more transaction, and we may draw bill on debtor. We may draw a bill on debtor. So bills drawn on them. This is one more transaction. On the due date, the bill may be honored. Bills receivable honored. On the date of honoring of bill, if we are the holder, if we are the holder of bill, then we record the entry. If the holder is bank, we discounted the bill to the bank. In that case, we don't receive any amount. No? The bill is endorsed to our creditor. Who receives money? Creditor will receive money. Whenever a bill is honored, bills receivable honored on the due date, check whether you are the holder or not. If we are the holder of bill, then we record the entry. Clear, everybody? Yes, sir. Next, the same on the due date, there is one more possibility, na? Bills dishonored. This is one more possibility. Next, when we when the bill is retired before the due date, when the bill is retired before the due date, then we allow some rebate to the customer. We have discussed this in the concept of retirement of bill. Okay, receipt of bills receivable. Next, due to insolvency of debtor, some of the debtors may become bad debts. Some of the amount due from them may become bad debt. Some of the amount may become bad debt. So these are the probable transactions, and here we can also write bills receivable endorsed. Bills receivable endorsed to creditor. Here you can write creditor. Clear, everybody? So these are the probable transactions between debtor and its business. Now what we have to do? All these transactions now we record in the journal first. From journal we post into various ledger accounts. But here we prepare only in the examination problems, we prepare only total debtors account and bills receivable account. After balancing total debtors account, what we get? Closing balance. Now, what we get? Closing balance. The same closing balance may become opening balance for the next year or next period. That's why here I have written opening balances of debtors. Opening balances of debtors. Observe carefully. Clear, everybody? Yes, sir. Now look at one by one transaction. Now check one by one transaction. Check one by one transaction. Opening balance of debtor. Opening balance of debtor. We show on the debit side of debtor account. Next, second transaction. Goods sold to them on credit. Goods sold to them on credit. What is the entry we record? Debtor account debit. So debtor account debit to sales account. So debtor account debit side to credit sales. First, I am discussing the probable transaction and their entries and their postings. Next one, bills receivable drawn on them. What is the entry for this? Bills receivable account debit to debtor account. So debtor account credit side by bills receivable credit side. Bills receivable account debit side to total debtors account bills receivable received. Bills receivable is asset now. So asset shows which balance? Opening balance. Suppose in the problem if they have given bills receivable opening balance debit side. Next one, bills dishonored. What is the entry for bills dishonored? Debtor account debit to bills receivable account. So by debtor account debit side to bills receivable. This is very, very important. In the problems we have to check. Bills receivable account credit side by total debtors account bills receivable dishonored. Clear? Next one, cash or checks received from debtors. Entry cash or bank account debit to debtors account credit side by cash or bank. Next, sales returns. What is the entry for sales returns? Sales returns account debit to debtors account. So debtors account credit side by sales return. Next one, discount allowed to debtors. What is the entry for that? Discount allowed account debit to debtors account. Discount allowed or rebate account debit. Discount allowed account debit to debtors account. Next one, rebate or any other concession allowed to them. Simply we debit rebate account to credit debtors account. Next, receipt of bills receivable. Already we know the entry for this. Bills receivable account debit to debtor account. Already we have completed the entry for this. Next, bad debts written off. What is the entry for bad debts written off? Bad debts is loss for us. So bad debts account debit to debtors account. So debtors account credit side by bad debts. Over. Next, bills receivable endorsed to creditors. Entry creditors account debit to bills receivable account. Bills receivable account credit side by creditors account bills endorsed. Already in the creditors account debit side we have posted. On the debit side of creditors account we have posted the same. Clear? So these are the probable transactions between debtors and its customer, including bills receivable transactions. Now, if you balance total debtors account, if you balance total debtors account, debtors account, generally possible, first possibility, if debit side is more than credit side, generally what might be the missing amount? Closing balance of debtor. Generally, when you balance debtors account, what you find by balancing debtors account? Closing balance of debtors. Closing balance of debtors. Yes or no, students? Closing balance of debtors. Observe. Or else, if credit is more than debit, generally debtors account shows which balance? Debit balance, sir. But sometimes after recording all these transactions, we balance the debtors account, but credit side is more. Credit side is more. When credit side is more, then what might be the missing amount on the debit side? Check. If opening balance is not given, opening balance is not given, then we assume it is opening balance of debtors. All information is given, but opening balance is not given. Then assume it is the opening balance of debtors. Next, if credit balance is more, means credit side of amount is more than debit amount, then check the account. If opening balance is given, yes sir, it is given, but credit sales information is not given, sir. Credit sales information is not given. In that case, we assume it is credit sales made during the year. Okay. Next possibility, if credit side, sorry, debit side is more than credit. Debit side is more than credit. What might be the reason? Observe on the credit side. Observe on the credit side. Sometimes the missing amount may be cash collected from debtors. Sometimes the missing amount may be cash collected from debtors. Observe the debtors account. Debtors account credit side, we have cash collected from them by cash or bank account. Yes, sir. So in that case, the difference may be cash collected from debtors. Understood or not? Yes, sir. So like this in the debtors account, you just balance the account and identify what is the missing item. Most of the cases, the missing item may be credit sales or closing balance of debtors or opening balance of debtors or cash collected from debtors. These are the most possible missing amounts. Now, in the examination problem, if debtors account and bills receivable account both are given, in that case, first you balance bills receivable account. First, you balance bills receivable account. Sir, by balancing bills receivable account, what I could found, sir? Simple. Total debtors account you find. You can find total debtors means bills receivable received during the year. Bills receivable received means not amount. Bills accepted by the debtors. Bills accepted by the debtors received during the year. Now, this amount can be taken to the credit side of debtors account. Look at this amount can be taken to the credit side of debtors account. Observe carefully. That's why whenever you have total debtors account and bills receivable account, first balance bills receivable account, then after go to total debtors account. Sometimes the missing figure may be in the bills receivable account, bills receivable dishonored. All information is given, all information is given, but in the bills receivable account we are getting some balance, some difference on the credit side. This might be bills receivable dishonored. Bills receivable dishonored during the year. Yes or no, students? Yes, sir. Now this bills receivable dishonored can be taken to the debit side of debtors account. Observe debit side of debtors account. Yes, sir. So that's why when you have total credit debtors account and bills receivable account, first balance bills receivable account, then after go to total debtors account. Then after go to total debtors account. Is it clear, students? Yes. So this is the linkage between total debtors account and bills receivable account. Bills receivable account. Sometimes in the examination problem, they may give you some 4 to 5 marks question. 4 to 5 marks question on preparation of total debtors account. Like it's like problem number 6. Look at here, illustration 6. Calculate the bad debts from the given information. Calculate bad debts from the given information. So, which information they have given? Opening balance of debtor. See, opening balance of debtor 5 lakhs na. So that is written on the debit side. Closing balance of debtors credit side. Amount received in cash entry. So whatever the information they have given, visualize the entry. For opening balance, closing balance, there are no entries, but amount received from debtors. Cash account debit to debtor account to credit side by cash. Like this, one by one transaction we analyze and we post into debtors account. Finally, debtors account is balanced. There we found bad debts. Generally, bad debts are shown on the credit side of debtors account. What's the entry for bad debts? Bad debts account debit to debtors. So debtors are shown on the credit side of bad debts are shown on the credit side of debtors account, so that debit side of debtors account is more than credit side. We can observe here. Debit side we have 16 lakh 40. Difference we are getting on the credit side. Credit side generally first check closing balance. Closing balance is there, sir. So nothing but remaining amount, bad debts. Sir, in every problem, the missing amount in the debtors account is bad debt, sir. No, 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 no. Problem to problem, the missing amount in the debtors account will change. Clear? So this type of problem you may get in the examination for 4 to 5 marks. Don't neglect this total debtors account and bills receivable account. Then after, come to preparation of fixed asset account. Sometimes fixed asset may be anything: building account, machinery, plant and machinery account, or furniture and fixtures account, motor vehicle account, whatever it may be. Whatever it may be. Fixed asset account. Tell me, what are the items relating to, or what are the transactions relating to fixed asset account? First and foremost thing, opening balance and closing balance, sir. Close your eyes and tell me, opening balance and closing balance, sir. Okay, fine. Opening balance is, see, asset account now, opening balance, debit, sir. Two balance brought down. Asset na, closing balance, sir. Credit, sir. During the year, what are the transactions relating to asset? First, if any asset is purchased. If any asset is purchased, then what is the entry we record? Asset account debit to cash or bank account, sir. Yes, sir. To cash or bank account. Asset purchase. Second possibility, during the year, we may sell the asset. Whenever you sell the asset, what is the entry we record? Cash or bank account debit to asset account. So, asset account credit now by cash or bank account. And in the depreciation chapter, we understood that whenever any asset is sold, we try to calculate profit or loss on sale of asset. If it is profit, then what is the entry we record? Asset account debit to profit and loss account. Asset account debit to profit and loss account. Profit on sale. If there is any loss, then what is the entry we record? Profit and loss account debit to asset account. Asset account credit now by profit and loss account. During the year or at the end of the year, we provide depreciation. What is the entry for depreciation? Depreciation account debit to asset account. So by depreciation. Yes or no, students? Finally, we calculate the closing balance. Now, after completion of preparation of this fixed asset account, balance the account. If debit side is more than credit side, first and foremost thing which you have to see is whether you have closing balance on the credit side or not. If closing balance is not there, then assume it is the closing balance. Here, so credit side is more than debit side. Check first opening balance is there or not. Sir, opening balance is not there, sir. Then assume the missing item may be as opening balance. At the same time, sometimes we may get the missing figure maybe as during their asset sold or during their asset purchased. So by preparing fixed asset account, we can calculate this information. Yes or no, students? Yes, sir. So at the time of preparation of problem or conversion method, at the time of preparation of final accounts by following conversion approach, first and foremost working note which you have to prepare is total debtors account, bills receivable, total creditors account, bills receivable account, sorry, bills payable account, and opening balance sheet if required. At the same time, some fixed asset account. These are the main working notes. Working notes. If any additional working note is needed, then you can prepare. After understanding this process, next one is distinction between business expenses and drawings. Business expense is shown on the debit side of P&L account. Drawings are deducted from capital at the end of the year. We have discussed in the 12th chapter that final accounts of sole proprietorship. Whenever we are preparing the balance sheet, drawings are deducted from capital, na? Yes, sir. So, whatever the information they have given in the problem, identify which is business expense and which is drawing personal expense. They have given some information, identify. If it is expense, na, yes, sir, it is rent paid, for example, rent paid expense. Identify whether it is relating to business or whether it is relating to owner's proprietor personal expense. If it is proprietor's personal expense, it is drawings. If it is relating to business, then it is business expense. Like this, we have to identify which is business expense and which is personal expense. That is the information they are giving here. For example, look at Rent of premises commonly used for residential as well as business purpose. Common electricity and telephone bills. In case of common electricity and telephone bills, we have to bifurcate this expense between business and proprietor. Business expense P&L account debit. Proprietor is equal to drawings. Life insurance premium of proprietor or partner paid from business cash. Household expenses met from business. Private loan paid to friends and relatives out of business cash. Personal gifts made to any friends and relatives out of business cash. Goods or services taken from business for personal consumption. Cash withdrawal to meet family expenses. Amount collected from debtors directly used for meeting personal expense. These are the probable things of expenses between expenses of business and drawings. Is it clear, students? So while solving the problem, identify what is business expense and what is personal expense. Based on that, you take decision. Next, see when the out of the information we are identifying whether this expense is relating to business or personal. The same time, business received some amount. I repeat, business received some amount. Whether this amount is relating to business or whether this amount is relating to proprietor or owner, you have to identify. If the amount is relating to business, it is business income. If the amount is relating to proprietor, it is proprietor income. That should not be mixed with the business income. So proprietor amount they have kept in the business, that is capital. During the year, suppose the proprietor has building on his own name. From that building, the proprietor received some rent. Some rent. This rent belongs to proprietor. But if the same rent is taken to the business, becomes it is not business income. This rent received is treated as additional capital contributed by the proprietor. Additional capital contributed by the proprietor. Building is owned by the proprietor, not business. So rent is the income for a proprietor, not for the business. But rent amount is kept in the business. Then this should be treated as additional capital. Like this, in the information, do you have any such things or not? Identify first. Do you have any such things or not? Identify first. Okay. So the difference between fresh investment by the proprietor or partner. Like drawings, often fresh investment made by proprietor or partner are not readily identifiable. Right. It becomes necessary to scan the business transactions carefully. Suppose in illustration 10, if you observe, illustration 10 or 9, whatever it may be, here they have given so much of information. Out of this information, what you have to identify? Expenses, whether it is relating to business or not. Personal expenses, whether any amount received by the business, whether it is relating to business income or owner income, that you need to identify. Next, so here they have given some examples, you can check it. Right. Next, here you can observe difference between statement of affairs and balance sheet. So this you can study. What is the difference between statement of affairs and balance sheet? We discuss in the next video. Right. Next one, features of single entry and types of single entry system. That's it. That's it. Those things we discuss in the next video. Don't worry. Now, finally, in this video and in the previous video, part one video, what we can observe, we understood the process of solving of problem on conversion method. The process of solving of problem on conversion method. Now you can see illustration 9. From the following data furnished by Mr. Manoj, you are required to prepare trading P&L and balance sheet as at that date, 31st March 2022. Immediately what you have to do, prepare the format of trading account, P&L and balance sheet. After the damn sure working notes are creditors account, debtors account, cash book. If capital is not given, opening balance sheet, opening statement of affairs. Okay. If bills receivable is there, bills receivable account, bills payable is there, bills payable account. After that, check the data. Here it is 1st April 2021, it is 31st March 2022. It is opening and it is closing. They have given creditors information. Normally, this is the opening balance of creditor and this is the closing balance of creditor. Yes or no? Now come to first opening balance. Opening balance is shown on the liability side of opening balance sheet first. You prepare opening balance sheet with the assets and the liabilities information. This becomes liability at the beginning of the year. First. Second, if you prepare creditor account, this becomes opening balance, means by balance brought down. Like this, we have to write the information in the appropriate place. The appropriate place. Yes or no, my dear students? Yes, sir. At the same time, look at here. Sundry expenses outstanding. Sundry expenses outstanding. At the beginning of the year, some sundry expenses are outstanding. What you have to do? Opening balance sheet liability. At the end of the year, some sundry expenses are outstanding. What you have to do? Closing balance sheet liability. During the year, what you have to do? During the year, you can check some expenses paid. Expenses paid. This is outstanding now. Here you get some expenses paid or general expenses for additional capital, cash purchases, yeah, cash expenses also. Here they have given cash expenses. Cash expenses means expenses paid during the year. How much expenses you have paid? 9570. During the year, how much expenses you have paid? 9570. Out of this, first we pay 600 rupees previous year expense na. Sir, previous expense we pay, sir. So 600 minus, because this 600 belongs to next, sorry, previous year. You have paid during the year, you have paid 9570. Yes, but out of this 600 belongs to previous year. Yes, sir. Previous year amount we should not show in the current year. Yes, sir. So 8970 is the current year cash expense. Still payable how much, sir? 330, sir. Still payable how much, sir? 330, sir. Means 9300 is the total expense for the year. Total expense for the year. See, this is the total expense for the current year. This is the total expense for the current year, whereas this is the amount paid during the year. There is a lot of difference. This is the amount paid for cash expense, for expenses during the year. This is the amount of expense for the year. For the year expense means this amount consists two things. One, 8970 cash paid and 330 outstanding. Whereas this 9570 consists of two amounts. One is paid for previous year, paid for previous year, and paid for current year. Yes or no, students? Yes, sir. Like this, you have to do certain adjustments. Same final accounts adjustments. Same final accounts adjustments. Is it clear? Now, cash expense, na? Cash expense, na? Cash expense means record the entry for this. What is the entry we record for cash expense? Expense account debit to cash or bank account. First, cash or cash book we maintain, na? So cash book give posting on the credit side. Cash book give posting on the credit side. Next, expense is nominal account, transfer to the P&L account. Expense is nominal account, transfer to the P&L account. So I told you already, all the items of incomplete information problems are taken to two places. Taken to two places. Don't forget this. Here, cash expense na. First, it is payment. First, it is payment. Cash book credit side, payment. Next, it is nominal account na. Transfer to P&L account debit side. While you are transferring to the P&L account na, here you have certain adjustments. Check it. Very interesting. Very interesting. That's why I said you need to have clear clarity on the accounting cycle. When you have clear clarity on accounting cycle, these problems are nothing. Now, if you want, you can watch this video once again. After that, go to the problems. One problem you observe with utmost care, and automatically the remaining problems you can understand easily. Is it clear, students? Yes, sir. Hello, students. In this video, we try to discuss the remaining concepts left in the accounts from incomplete records chapter. Now look at, after understanding all the problems, now we are discussing all these things. Difference between statement of affairs and balance sheet. See, we have prepared a statement of affairs now. It looks like the balance sheet, but it is not original balance sheet. It is just looks like the balance sheet, but it is not original balance sheet, to remember. Original balance sheet is prepared through some approach. Means all the transactions are recorded first. From there we start recording the preparing the balance sheet. From there we start preparing the balance sheet. Yes or no, students? Yes, sir. Now what is statement of affairs and what is balance sheet? What are the differences? We try to understand first. First one, the source of preparation for the statement of affairs and source of preparation for the balance sheet. First, try to look at the balance sheet. It is based on the transactions recorded strictly by following double entry bookkeeping. Yes or no? But statement of affairs is prepared from the transactions which are recorded by following double entry bookkeeping and at the same time single entry also. We understood at the beginning of this chapter that for some transactions they record both the aspects. For some transactions they record only one aspect. For some other transactions there is no record at all. So statement of affairs is prepared by following double entry system from the transaction which is followed double entry system and single entry system also. Next, capital. See, by preparing statement of affairs, we can calculate capital, nothing but assets minus liabilities. By preparing balance sheet also, we can understand the difference between assets and liabilities capital. But when you follow double entry system of bookkeeping, capital account balance you identify in the ledger account, na, capital account. But here under single entry system or accounts from incomplete record system, there is no account called capital account. That's why this statement of affairs is prepared to know the capital balance. Hope you are following. So capital is merely a balancing figure being excess of assets over liabilities. Hence assets need not be equal to liabilities. Next, capital is derived from the capital account in the ledger. Therefore, the total asset side will always be equal to total liabilities plus capital. Clear? Next, omission. Since this statement is prepared from incomplete records, it is difficult to identify and record those assets and liabilities if omitted from the books. Why? Because here we don't have complete information. So some assets or liabilities may be missed. So that the capital which we calculate by following this statement of affairs method may not be correct one. But whereas by following balance sheet approach means through transactions, there is no possibility of omission of any item of asset and liability since all items are properly recorded. All items are properly recorded and they are taken to the trial balance. From trial balance we prepare balance sheet now. So no item is missed. Next, basis of valuation means how the assets are valued. See, when we don't have proper record system means under incomplete record system, the asset accounts are not maintained. Generally, assets accounts are maintained at its historical cost. But here, assets accounts are not maintained, so that here we recognize the assets through the arbitration price or through some estimated value. But under double entry system of bookkeeping, whenever we purchase the asset, we record it in the books of accounts first. Yes, sir. Automatically, the same value will be continued. The valuation of assets is generally done on arbitrary basis. Therefore, no method of valuation is disclosed. The valuation of asset is done on a scientific basis. Fixed assets are shown at the original cost, means historical cost less depreciation to date. Any change in the method of valuation is properly disclosed. Next, objective. What is the objective of preparing statement of affairs? Just to know the opening capital and closing capital. If opening capital balance is not given, then we prepare opening statement of affairs. If closing balance capital is not given, then we prepare closing statement of affairs. But what is the objective of preparing balance sheet? To know the financial position of the business. What is the objective? To know the financial position of the business. Yes, sir, no, students. So it is prepared to ascertain the financial position on a particular date. Is it clear? Yes. So this is the simple question on difference between statement of affairs and balance sheet. Next, features of single entry system. See, it is an inaccurate. This point is very very important. Based on this point, they may frame one true or false statements. Don't forget. It is an inaccurate, unscientific, and unsystematic method. Whereas double entry system, it is accurate, systematic, and scientific of recording business transactions. There is generally no record of real and nominal accounts. We already understood. For some transactions, they record both the aspects. So for which transaction they record both the aspects that I have already discussed. That is, um, suppose some cash is received from debtors. Some cash is received from debtors. They record this transaction in the cash book, plus they record the same transaction in the debtors ledger. But there is no record of real accounts and nominal accounts. And in most cases, a record is kept for cash transactions and personal accounts. Cash book mixes up the business and personal transactions of the owners. Yes, sir. That's why while preparing the financial statements of business, we have to separate business expense and personal expense. Next, there is no uniformity in maintaining the records, and system may differ from firm to firm depending on the requirements and convenience of each firm. Means in some particular business, there are no books of accounts maintained. There are no even this um, that what we call, even one aspect is also not recorded. Some businesses they don't even maintain cash book. Some businesses they may maintain personal account, means the personal account in the sense creditors accounts, debtors accounts. They may not maintain cash book. Some businesses they may maintain cash book, debtors ledger, creditors ledger, like that. Next, profit under this system is only an estimated basis. Only an estimated basis on available information, and therefore true and correct profit cannot be determined. I already said the profit which is calculated by following statement of affairs method is not accurate one. But conversion method, to overcome that we are following conversion method. Same is the case with the financial position in the absence of a proper balance sheet. Right. Next one, types of single entry system. This is another important aspect of single entry. Already all the concepts we have discussed, but we have not given any name to that. Any name to that. Look at pure single entry. So pure single entry means what? Now you can see. In this only personal accounts are maintained. Only personal accounts are maintained. It is a result that no information is available in respect of cash and bank balances. Pure single entry. I said now some businesses they don't even maintain cash book. Only they maintain debtors and creditors information. Why? Because they have to receive amount from debtors. If they don't record, they may forget. And they have to pay amount to the creditors. If they don't record, they forget. That's why they maintain only personal accounts of debtors. Personal accounts, that means creditors and debtors account. If they are maintaining like this, so it is called pure single entry. Next, simple single entry. Simple single entry means what? Here they will maintain cash book and personal accounts. In these only personal accounts and cash book are maintained. Personal accounts and cash book are maintained. Although these accounts are kept based on double entry system, postings from cash book are made only to personal accounts with no other account to be found in the ledger. Personal accounts, cash book, both are maintained. They are maintaining both the accounts, both books, but they are not posting into various personal accounts. They are not posting into various personal accounts from cash book or any debtors account or creditors account. Cash received from debtors or cash paid to creditors is simply noted on the bills issued or received as the case may be. They will not maintain debtors account separately, A account, B account, C account. They will not maintain like that. Simply they record one. I told you already now. What we call simply one book. The first page consists of index for debtors or creditors. The next page they will maintain a rough calculation. Next one, quasi single entry. First one pure single entry. Next one simple single entry. After that quasi single entry. Simple single entry. In these personal accounts, cash book and some subsidiary books are maintained. The main subsidiary books kept under this system are the sales book, purchase book, and the bills book. Only this much of bills they maintain. No separate record is maintained for discounts which are entered into personal accounts. Suppose one person has to pay me 1000 rupees. I have given 20 rupees discount. Remaining amount I receive 980. But when I see Mr. A account, now how much amount I deduct? 1000 rupees I deduct. Then what about discount? There is no concept of discount. Directly I will deduct 1000 rupees. That's why no separate record is maintained for any discounts. In addition, some scattered information is also available in respect of few important items of expenses like wages, rent, rates, etc. In fact, this is the method which is generally adopted as a substitute for double entry system. It's a substitute for double entry system. See, observe carefully. Pure single entry, simple single entry, and quasi single entry. This question we may expect in the exam. If any theory question is asked from this chapter, in that case we may expect this type of question, types of single entry. Okay, so with this we can conclude our accounts from incomplete records. So if you want, you can watch the videos once again, and if you have any doubts, you can send me through WhatsApp or Telegram, whatever it may be, and try to solve all the problems with hand. Because in our online classes what we are doing is we are just explaining the problem and important calculations I am solving, but solving the entire problem takes so much of time. In that case, the course duration length will become much. That's why we are giving question answer format. But you have to practice all the questions pen paper. Is it clear, students? Yes, sir. So here I'm here to um, solve on all your doubts. So have to send me your queries. Okay, within reasonable time I will respond. Is it clear, students? Yes, sir. Hello, students. In this video we discuss illustration 1. This illustration is on the concept of statement of affairs method. Okay, now observe carefully. First one, Raju does not maintain proper records of his business. That's why we are trying to solve this problem. However, he provides the following information. What information he is providing? Look at opening capital. Okay, next closing capital, drawings during the year, capital added during the year. You are required to calculate the profit or loss for the year. It is very simple problem. Don't expect this type of problems in the exam, but this is given just to understand the concept of this statement of affairs method. Under statement of affairs method we prepare two statements. No? Under statement of affairs method we prepare two statements. First one is statement of affairs at the beginning and at the close, opening and closing. After that we prepare statement of profit or loss, profit and loss. Now they are asking this question based on this concept, statement of profit and loss for the year ended. See, what is the statement here we have to follow? First we take capital at the end, to that we add drawings. From that we deduct capital at the beginning and further capital introduced. Difference is nothing but net profit or net loss. Already we understood this concept. Now look at, we try to solve the problem. First, they have given opening capital, closing capital, drawings during the year, capital added. So first what amount we take? Closing capital. The closing capital is 12,500. Closing capital is 12,500. To this what we add? Drawings. Drawings are 3,000. Total 15,500. Next one, from this what we deduct? Opening capital. Opening capital is 10,000. At the same time we deduct additional capital introduced during the year, capital added during the year 3,750. Now deduct, look at how much we are getting. Simply 12,500 plus 3,000, 15,500 minus 10,000 minus 3,750, it comes to 1,750. 1,750 is the profit for the year. For the year, the same you can find in the calculation. Look at, yes, computation of profit or loss during the year. So this is our simple problem. And the same also can be prepared by preparing, same also can be calculated by preparing capital account of the proprietor. Capital account shows generally which balance? credit balance. So what is the opening capital? 10,000. Closing capital debit side to balance carried down 12,500. For the drawings, see during the year whenever proprietor withdraw anything, we record the entry drawings account debit to cash or bank or any asset or goods purchases account. But here at the end of the year, what we do is finally the drawings account is transferred to capital account so that we close that account. We record the entry drawings account debit to capital. So capital account is debited now on the debit side to drawings 3000. And he introduced additional capital. Yes, sir. What is the entry for introduction of additional capital? Cash or bank account debit to capital account. So by additional capital 3750. At the end of the year, we have seen in case of final accounts of sole proprietor, if we get any net profit or net loss during the year, that is transferred to the capital account of proprietor. In case of net profit, what is the entry we record? Profit and loss account debit to capital account. In case of net loss, profit and loss, sorry, capital account debit to profit and loss account. That is the entry we have recorded. Yes, sir. Here we have a difference of 1750 difference. Difference 1750. Observe. Drawings plus closing balance total 15,500 minus opening balance and additional capital. Opening balance and additional capital 13,750. If you deduct, we are getting 17,550 rupees. 70, sorry, 1,750. And this we are taking as balancing figure. If credit side is more than the debit side, then that amount can be taken as net loss. But here the debit side is more than credit side. So this amount we are taking it as net profit. But in the examination, what we have to do is we have to prepare this statement, not account. Statement we prepare, not account. Hope you understood this problem. Check it. This is a very simple problem. Sometimes you may get this type of problem for 4 marks also. Is it clear? Next, look at. Okay. Hello students. Now in this video we discuss illustration 2. Illustration 2 is also on the concept of statement of affairs. Okay. Now look at it. Rakesh started his business on 1st April 2021. He started business on 1st April 2021. He invested a capital of rupees 1 lakh. See, already he is giving what? This is nothing but opening capital. He started his business with this capital, opening capital. So you need not to prepare any opening statement of affairs here. On 31st March 2022, he has the following information available as per the single entry system maintained by him. Single entry system. Now observe what information you are getting. Cash balance counted 3,200. Inventory physically verified 34,800. As we are getting information from incomplete records, what we do? Cash balance. We check cash balance physically. We count the cash balance physically. At the same time, inventory. Inventory also we count physically. Physical verification. Next, receivable from Ajay against credit sales. We have only one debtor. Receivable from Ajay means debtor. We have only one debtor. Okay, so trade receivables. Machine 85,000. This is asset for us. Payable to Vinod towards credit purchases 12,000. Means it's a liability for us. Loan taken from bank 10,000. It is also liability for us. Next one. Next one, okay. Drawings during the year 24,000. Drawings during the year 24,000. This is the amount withdrawn by the proprietor. Next, you are required to calculate the profit or loss earned by Rakesh for the year ended 31st March 2022. Nothing but now we have to we have to prepare statement of affairs. Opening statement of affairs, closing statement of affairs. Here you need not to prepare any opening statement of affairs. Why? Because already opening capital is given. Observe here, already you are getting opening capital now. What is the opening capital here? 1 lakh. Now, to know closing capital, we prepare closing statement of affairs. How, sir? Simple. It is just similar to preparation of balance sheet. Look at first one, cash, asset now, left hand side of, sorry, right hand side of balance sheet. Inventory, asset. Receivables, asset. Machine, asset. Payable to Vinod towards credit purchase. Liability, na? Statement of affairs, left hand side. Loan taken, liability. Next, drawings. Drawings are not shown in the statement of affairs. Okay, now look at, if you prepare the statement of affairs, it looks like this. See, cash balance, inventory, sundry debtors, machine. Next, sundry creditors, loan from bank. The difference between assets and liabilities becomes capital now. Look at how much is the capital, 1,32,000. This is nothing but closing capital balancing figure. Now what we do, we compare the capitals. Closing capital we have 1,32,000, whereas opening capital we have 1 lakh. 1 lakh. Now compare. For that we prepare statement of profit and loss for the year ended 31st March 2022. Okay, look at how the capital can be compared. First we take closing capital. As we know, closing capital, to this we add drawings 24,000. To this we add drawings 24,000. Now, sir, why we are adding drawings, sir? If he would have not withdrawn amount from business, then what is his capital? 1,56,000. Because he has withdrawn some amount from business, his capital gets reduced. That's why we are adding back the drawings. So before drawings, his capital is 1,56,000. What is the opening capital? Here we have 1 lakh rupee. Opening capital is 1 lakh. Now closing capital 1,56,000 before drawings. Opening capital 1 lakh. Deduct. How much we are getting? 56,000 is our profit for the year. This is very simple problem, students. So first you need to understand whether both opening and closing statement of affairs is prepared or not. Both need not to prepare. Why? Opening capital already they have given. You need not to prepare opening statement of affairs. Now we have to prepare closing statement of affairs. Yes or no, students? Yes, sir. Next one, look at. Next, illustration 3. These are very simple problems, students. These are very simple problems. Now, illustration 3, look at. Assets and liabilities of Mr. X as on 31st March 2021 and 31st March 2022 are as follows. Here two dates they are giving. 31st March 2021. Next date, 1st April 2021. 1st April 2021 becomes opening date for the financial year 21-22. 21-22 financial year. Yes or no, students? Yes, sir. Now look at. So here they are giving statement of affairs on 31st March 2021 and 31st March 2022. Now what we have to do? Simple. We have to prepare a statement of affairs on 31st March 2021 and 31st March 2022. Clear, students? Yes, sir. Sir, how do we prepare, sir? Very simple. Look at. First we put the heading, problem number 3. Statement of affairs. Statement of affairs on 31st 3 2021 and 31st 3 2022. Okay, so here we draw the format. And do remember, students, here we are preparing statement of affairs on two dates. If you want, you can prepare separate statement, or you can prepare combined statement. So here we take 31-3-21, here we take 31-3-22, here also 31-3-21, here also 31-3-22. Like this you can prepare. Now observe here one by one. First we have building now. So 31-3-2000, building is asset for us. Building is asset for us. Furniture asset, inventory asset, sundry debtor asset, cash at bank asset, cash in hand asset. Next one, liabilities. Loan liability, sundry creditors liability. But here you need to observe one thing. What is that? Decided to depreciate building by 2.5%. If you observe, in case of final accounts of sole proprietorship, what we did, whatever the building we have at the beginning of the year, on that we provided depreciation. Depreciation is deducted from building, from the value of building, and the same depreciation is taken to the profit and loss account debit side. Hope you are following. Yes, sir. Now here also we have to do the same. Observe here, 1 lakh is the opening value of building. Closing they are giving question mark. Means you deduct 2.5% depreciation. How much? 2500. 2500. Then how much you are getting? 97,500. At the same time, furniture also. Furniture depreciated at 10% per annum. Furniture value is 50,000. 50,000 minus 5,000 rupee. Now, how much we are getting value of furniture on 31st March 2022? 45,000. That's it. Next one life insurance policy of the proprietor was matured during the period and the amount of 40,000 is retained in the business. What is the meaning of this? Nothing but, see, whenever the business pays life insurance premium of the proprietor, then we have recorded the entry like drawings account debit to cash or bank account. But here, the life insurance policy is matured. This amount belongs to proprietor, but the proprietor kept that amount in the business itself. So this is nothing but, this can be treated as additional capital. This can be treated as additional capital. Next, proprietor took 2,000 rupees per month for meeting family expenses. Nothing but drawings. See, 2,000 rupees per month into how many months? 12 months. So total drawings becomes 24,000. Total drawings becomes 24,000. Observe carefully. Yes, sir. Now what we do? Simple. Total assets on 31st March 2021, total liabilities. What do you get? Opening capital. Difference between assets minus liabilities, opening capital. Next, closing balances of assets. After providing depreciation for building and furniture, closing balance is 97,500 and 45,000. Closing balance of asset total, liabilities total. Liabilities total. You get closing capital. And that is compared with this additional drawings and additional capital. Now look at here. Yes. So if you observe here, these are the opening dates, asset. What is the total amount? 381,200. You people also total it once again. 2,81,200 minus loan and sundry creditor. Difference is 2,41,200. This is nothing but opening capital. And closing date, observe. And do remember, when we are writing assets at the end of the year, if any depreciation is given, that depreciation must be deducted. So 1 lakh minus 2.5%, 50,000 minus 10%, 97,500 and 45,000. Now total assets. Total of assets is equal to 5,90,700 minus total of liabilities 80,000 and 70,000. Difference is nothing but capital. And this capital is nothing but closing capital. This capital is nothing but closing capital. Now here we have opening capital and closing capital. Now you can compare and you can prepare statement of profit and loss. But in this problem, if you observe, what is the requirement? In this problem, what is the requirement? Prepare statement of affairs as on 31st March 2021 and 31st March 2022. It is just preparation of statement of affairs. That we did already. If you observe the next problem, illustration 4, they are asking, take figures given in illustration 4, not illustration 4, this is illustration 3. Find out profit of Mr. X for the year ended 31st March 2022. Already here we understood how the statement of profit and loss is prepared. Very simple. Look at here. What is the closing capital? What is the closing capital? Closing capital already we have calculated now. How much? 4,40,700. From to that what we have to add to that? See here I am writing 4,40,000. Just a minute. Opening capital, sorry, closing capital. You can also solve the problem like this. Closing capital is equal to 4,40,700. Add drawings. Drawings are 2,000 rupee per month into 12, total 24,000. Total 24,000. Now it becomes 4,64,700. From this what we deduct? Deduct opening capital. Deduct opening capital. How much is the opening capital? We have already calculated opening capital now. How much is the opening capital? 241,200. Opening capital 241,200 deduct. And during the year one life insurance policy of the proprietor is matured now, that becomes additional capital. How much is the additional capital? 40,000. Now deduct simply 4,40,700 plus 24,000 plus 464. Okay, 700 minus 241,200 minus 40,000. It becomes 1,83,500. This is nothing but profit for the year. Hope you guys are following. Yes sir, profit for the year 183,500. This is your answer. But in the examination what they may ask? They may ask prepare a statement of affairs and profit for the year. Calculate profit for the year. In that case you have to prepare statement of affairs and this statement completely. Okay. Now look at. So this is our illustration 4. So illustration 3, illustration 4 you may consider as one problem. Okay, see some note points they have given. Closing capital is increased due to fresh capital introduction. Yes, how the closing capital increases? Due to introduction of additional capital and due to profits of the year. So it is deducted. Closing capital was reduced due to withdrawal by proprietor. So it is added back. And they are saying, students, you can also prepare the same. You can also calculate the profit by preparing capital account also. Yes, that is true. But in the examination problems, you are supposed to solve the problem by preparing a statement, not an account. See, opening capital they have given 241,200, closing capital 440,700. You can prepare, but most of the cases we take statement only, right? Drawings 24,000, additional capital 40, difference is nothing but 1,83,500. For to solve the problems of incomplete records, you need the knowledge of final accounts, students. Final accounts. Is it clear? So check these problems once again. Illustration 2. In this video, we have covered illustration 2, 3, 4. Observe carefully. Hello students. In this video, we discuss illustration 5. This is very important in terms of concept. Maybe they may ask in the exam also, but in terms of concept, it is very, very important, students. Now, observe the problem word to word and try to understand the problem first. Then after, what is the requirement of the problem? Look at the income tax officer. In short, we call him as ITO, income tax officer, on assessing the income of Sri Moti for the financial years 2021, 1 year, 21-22, another year, 2 years, feels that Sri Moti has not disclosed the full income. See, every individual who is earning income more than 2.5 lakh or 3 lakhs, whatever the case may be, and every businessman who is doing business, they have to file income tax returns to the income tax department. Means it discloses or it shows the income which we have earned during the year and the tax liability, how much amount of tax one should pay. Okay, and the tax paid details. All these details contains in the income tax return. Clear, everybody? Now, the income tax returns which we have filed, those we have filed, they are verified by the income tax officer, and this is the case. Mr. Moti filed income tax returns already for 2 years, 2021, 21, 22. During the verification of these income tax returns by the income tax officer, he felt that Mr. Moti has not disclosed full income. Means what? He has disclosed only part of the income, or to put it in one line, he has not disclosed full income. Is it clear? Sir, how much is the full income? That income tax officer doesn't know. Who knows? Moti only. So, now the question comes, he means income tax officer gives you the following particulars of assets and liabilities of Sri Moti as on 1st April 2020 and 1st April 2022. Now the income tax officer is giving you the information on 1st April 2020 and 1st April 2022. Means he is giving 2 years data. He is giving 2 years data. Is this clear, students? Okay. Now look at what is the information that he is giving. First, on 1/4/2020, he has these many assets and liabilities, two liabilities, assets, liabilities. Fine, sir. And on 1/4/2022, on 1/4/2022, he has these many assets. Just a minute. Cash in hand, inventory, sundry debtors, land and building, motor car, wife's jewelry, loan to Moti's brother, sundry creditors. It's one liability. It is one and only liability. Remaining all are assets. And previously on 1/4/2020, what are the assets he is owning? Cash in hand, inventory, sundry debtors, land and building, wife's jewelry. Liabilities owing to Moti's brothers. Owing to Moti's brothers and sundry creditors. But on 1/4/2022, observe, now he is saying loan to Moti's brothers. Means we have given loan to Moti's brothers. That becomes asset for us. And here, owing to Moti's brothers, it is a liability for us. So here you have to take care. Okay, the details of assets and liabilities they have given. Now look at during the 2 years. Here you need to observe one thing, 2 years data. But in the previous problems 1, 2, 3, what we did, we have taken 1 year data. Opening of the year, closing of the year, only 1 year data. But here 2 years data. Opening, closing, 2 years data. Yes, sir, no, students. Yes, sir. Now look at. During the 2 years, the domestic expenditure was 4,000 per month. During the 2 years, the domestic expenditure was 4,000 per month. Means normally what we do, we multiply this 4,000 per month with 12 months. But now what we have to do, we have to multiply this 4,000 with 24 months. We have to multiply this 4,000 with 24 months. Why? Because this is 2 years data. Next, the declared incomes of the financial years were 1,05,000 for 2021 and 1,20,000 for 21-22. Both together, how much income he has disclosed? How much income he has disclosed? 1,05,000. 1,05,000 and 1,23,000. Total he has disclosed 2,28,000 income for 2 years. 2,28,000 income for 2 years. Yes or no, students? Yes, sir. Now the question comes. State whether the income tax officer's contention is correct. What is income tax officer is saying? Mr. Moti declared only 2,28,000 income. I feels that this income is less, means he has not disclosed full income. He has not disclosed full income. Okay. Explain by giving your workings. Now we have to tell to the income tax officer whether income tax officer contention is correct or not. When the income tax officer's contention is correct, suppose we calculate the profit for 2 years, because he is giving 2 years data now, so that we calculate 2 years profit. 2 years profit we calculate. If the 2 years profit is more than 2,28,000, then the income tax officer's contention is correct. If the 2 years profit is less than 2,28,000 or 2,28,000, then the income tax officer contention is not correct. This is possible only when we solve the problem first. First, solve the problem and try to identify how much is the profit for 2 years. How much is the profit for 2 years? Yes or no, students? Yes, sir. Yes, sir. Is it clear? Yes, it is clear. Now look at everybody. Now look at. First, we calculate. So here, how can you solve the problem? Simple. First, you may draw. So suppose here, observe the same statement of FS you can prepare, but here the dates are different. The dates are different. Look at here. Here you may take first. What are the dates they are giving? 1st April 2020. 1st April 2020. Next one, 1st April 2022. 2 years data na? Yes, sir. 1/4/2020, 1/4/2022. Here you can take assets, here you can take liabilities first. Okay, look at. Yes. So like this we prepare statement of affairs. Opening, closing. And don't forget this is 2 years data. 2 years data. Or else you can also prepare the problem as given in the answer. See in the answer how they have given. Calculation of capital of Sri Modi. First they are taking all assets. Means this is nothing but vertical format. First they are taking assets, after that they are taking liabilities. Look at. Opening date, closing date. In this order you may follow, or else you may prepare our regular format like this. Statement of affairs. Liabilities 1/4/2020, 1/4/2022. Assets 1/4/2020, 1/4/2022. You may follow either one. Okay. First we take liabilities. Observe. So first total assets count. Cash in hand. Opening date 25,500, closing 16,000. Inventory. Opening date 56,000, closing 91,500. Sundry debtors. Opening 41,500, closing 52,500. Land and building. Opening 190, closing also 190. If you have any depreciation, that can be deducted. Wife's jewelry. Opening 75, closing 125. Observe here. Opening wife's jewelry 75 only, but now it is increased to 125. Motor car, there is no opening value of motor car now, but on 1/4/2022 we have motor car. Loan to Moti's brothers, we don't have at the beginning, but we have at the end. Now calculate total. This is the total. Liabilities you can write next line. This is the total of assets. What is the total of assets? 3,88,000 and 6,20,000. You can calculate, right? Next, owing to Motis Brothers. Liabilities we are writing. Owing to Motis Brothers. How much is the liability? 40,000 only at the beginning. At the end, no. At the end, we have given loan to Motis Brothers 20,000. Next, at the beginning of 1/4/2020, we have liabilities of 35,000 in the form of sundry creditors. Total liabilities are 75. Here only 55,000 creditors. Total 55. Deduct 3,88,000 minus 75,000. Here we get 3,13,000. Capital. Here we get 6,20,000 minus 55,000. Here we get 5,65,000. And this is the opening capital and this is the closing capital. Now observe carefully. Opening capital is how much? Sorry, closing capital is how much? 565. Closing capital. Closing capital is 565. To this what we add? Drawings. Drawings are 4,000 rupee per month. Into 24 months you have to consider. So 4,000 into 24 months, it comes to 96,000 total. It comes to 6,61,000 minus opening capital deduct. Opening capital. How much is the opening capital? 3,13,000. 3,13,000. And do you have any additional capital during the year? Additional capital. Check in the problem. Check in the problem. Any additional capital? No, sir. No additional capital. No additional capital. Fine. Just a minute. Deduct. So 6,61,000 minus 313. How much we are getting? 3,48,000. This is nothing but what? Profit for 2 years. That is 2021 financial year and 21-22 financial year. Now you people tell me the profit which we have calculated is 3,48,000 profit. But how much profit disclosed by Mr. Moti to the income tax department? To the income tax department. How much, tell me? 2,28,000. 2,28,000 means minus disclosed income. Disclosed income 2,28,000. Tell me how much is the suppressed income? So suppressed income 1,20,000. Now you people tell me income tax officer contention is correct or not? Yes sir, correct. Why sir? Actually Mr. Moti disclosed 2,28,000 income, whereas the full income is 3,48,000. So 1,20,000 is the suppressed income. Moti's income tax officer's contention is correct. This is the conclusion you have to write. Okay, now check the problem. See, 3,13,000. After that, so this is the calculation. So what you can do is you can separate statement of profit and loss. See, income earned in 2020, 21, 21, 22. How much? 3,48,000. Income earned. But income declared how much? 2,28,000. So what is the suppressed income? 1,20,000. This is our final answer. So the income tax officer's contention that Sri Moti has not declared his true income is correct. Sri Moti's true income is in excess of the disclosed income by 1,20,000 based on the information available. Whatever the information we have, by following that we calculated this. So first we need to understand the question. Then after we can solve the problem. See, the problem is similar. What is that? Preparation of statement of affairs on 1/4/20 and on 1/4/2022, but for 2 years. But the problem is what? He has already disclosed the income. Now we are calculating the revised income. revised income, and we are comparing that. We are comparing that. Is it clear, students? Yes. Now look at the next problem. Check this problem once again. Okay. Hello students. In this video, we discuss illustration 6. Illustration 6 is on the concept of conversion method. We have discussed conversion method. Okay, to prepare the financial statements. There we prepare total debtors account and bills receivable account as working note. Yes or no? See, how to prepare total debtors account and bills receivable account. What are the various transactions between debtor and business? These are the various transactions, and the account looks like this. In this account, any amount may be the missing figure. I repeat, in this account, any amount may be the missing figure. On the basis of that concept, they are asking this illustration 6. Observe carefully. Calculate the bad debts. Actually, this type of question they have asked for 4 to 5 marks in the previous attempts. Calculate the bad debts from the below information. What they are asking? Bad debts. To know the bad debts, which account we need to prepare? Total debtors account. Total debtors account. Look at. See. Suppose this is problem number 6. Total debtors account. Observe here, they are giving opening balance of debtors 5 lakhs. So opening balance, how do we write? To balance brought down. To balance brought down 5 lakhs. Yes or no? Yes sir. Next one, closing balance of debtors. Closing balance of debtors. Closing balance of debtors they are giving 7 lakhs. Closing balance of debtors we show like by balance carried down. How much? 7 lakhs. Next one. Amount received in cash. What is the entry for amount received from debtors? Debtors, sorry, cash or bank account debit to debtors account. So debtors account credit by cash or bank. How much? 6 lakhs. Next one, discount allowed. Discount allowed to debtors. What is the entry we record for a discount allowed normally? Discount allowed account debit to debtors account. So debtors account credit side by discount allowed. How much? 10,000. Next one, credit sales they are giving 11 lakh 40. What is the entry for credit sales? Debtors account debit to sales account. So to sales account, to sales 11 lakh 40. This is how we prepare the debtors account. Next one, bills receivable 3 lakhs. What is the entry for bills receivable? Bills receivable account debit to debtors account. So by bills receivable means we have received bills. Okay, for how much? For 3 lakhs. That's it. Now this is the information we have. Now they are asking how much is the bad debt. Okay, to know this, simply we balance this account now. We balance this account now. Generally debtors account shows which balance? Debit balance. Okay, means what? We have to receive amount. Look at 5 lakhs debit plus 11 lakh 40,000. So here we get 16 lakh 40,000 minus credit 6 lakhs minus 10,000 minus 3 lakhs minus debtors already we have closing balance now minus 7 lakhs. How much we have? 30,000 is the difference. 30,000 is the difference, and this difference we consider it as bad debts. So by bad debts, this we write it as balancing figure. Tell me, sir, how can you say this balance on the credit side as bad debts? Because in the problem they said bad debts question mark. That's why what we are doing is we are assuming that the difference on the credit side as bad debts. Is it clear? So debit side is more. When debit side is more, that means we have to receive amount from debtors. Yes, already here we have how much amount receivable from debtors, 7 lakhs. Yes, so the difference amount is considered as bad debts. This is our problem. Over 4 to 5 marks easily you can score. If you get this type of problem now, you can easily score 4 to 5 marks. So 30,000 is the debtors balancing figure. Is it clear, everybody? Yes, sir. Now look at the next problem. Hello students. In this video, we discuss illustration 7. Illustration 7 is on the concept of calculation of credit purchases. Credit purchases from the below. So here, if you want to know credit purchases, you have to prepare total creditors account. Total creditors account. So the missing figure in the total creditors account may be credit purchases. And at the same time, if you observe, here we have prepared a debtors account. Generally, when we follow conversion method for the calculation of profit or loss of the business, then this preparation of debtors account and preparation of creditors account both becomes working notes. So here they are asking a separate problem, but actually these two are working notes. Working notes. So if you know how to prepare this debtors account and creditors account now, the same can also be solved as working note. Now observe carefully. So here they are asking prepare credit purchases. Sorry, calculate credit purchases. For that, which account we prepare? We prepare debtors account. Sorry, creditors account. Observe creditors account. Problem number 7. Total creditors account. Sir, how can you say that by preparing creditors account we can calculate credit purchases? Okay, do one thing. What is the entry for credit purchases? What is the entry for credit purchases? Purchases account debit to creditors account. Nothing but and. Sir, why don't we prepare purchases account to know credit purchases? Purchases account shows cash purchases, credit purchases. But creditors account shows only credit purchases. That's why here we are preparing creditors account. Hope you guys are following. Yes, sir. Now look at one by one. Opening balance of creditors 4 lakhs. See, creditors shows credit balance na. So by balance brought down. Opening balance. How much? 4 lakhs. Over. Next one. Closing balance of creditors 5 lakhs. Closing balance nothing but 2 balance carried down. 2 balance carried down. How much? 5 lakhs. Next one. Payment made in cash. See, what is the entry we record? See, whenever they are giving the information like this, try to record entry in your mind. Try to visualize what is the entry for this. Payment made in cash. Generally, what is the entry we record? Creditors account debit to cash account. So, creditors account debit to cash or bank. Most probably we write bank because the amount is huge na 8,50,000. Next, discount received. What is the entry for discount received from creditors? Creditors account debit to discount received account. So creditors account debit na to discount received. How much? 20,000. Clear? Next. That's it. Only few information. Only 4 information. Okay, fine. Now balance this creditors account. Generally creditors account shows which balance? Credit balance. Credit balance means what? Credit side of the account is more. But here if you observe the debit side of the account is more. 8,50,000 8,50,000 plus 20,000 plus 5 lakhs. Total becomes 13 lakh 70,000 credit. Minus debit we have only 4 lakhs. So the difference of 9 lakh 70,000 on the credit side is considered as credit sales by credit sales. Balancing figure 13 lakh 70,000. That's it. This nine. So we have during the year we have purchased goods on credit for 9 lakh 70,000. That's it, students. It is very simple problem. It is very simple problem. Look at this creditors account 9 lakh 70,000. This is the balancing figure. Hope you understood this problem. Yes, sir. Now look at the next problem. Hello, students. In this video, we discuss illustration 8. Observe carefully. Previously, we have discussed illustration 9. There we understood what is the process of preparation of financial statements from incomplete records. Now look at illustration 8 also. So here you have to remember only one thing, that is, when you get a problem from incomplete records, anyway we prepare trading profit and loss account and balance sheet. In addition to that, we also prepare working note. Unavoidable working notes are debtor account, creditor account, cash and bank summary. If opening capital is not given, then we prepare opening statement of affairs. Do remember this. Okay. Now look at. Concentrate. A Adamji keeps his books on a single entry basis. Here specifically they are saying single entry basis. The analysis of the cash book for the year ended on 31st March 2022 is given below. So this is the cash book. Here they are giving receipts and here payments. And here they are giving opening balance. First observe the problem, analyze the problem. It is opening balance of cash. Received from sundry debtors. Cash sales. Capital brought during the year, additional capital. Interest on investment, it is income. Na? Here if you observe, cash book is given here itself. So you need not to prepare any cash book now. Next, payment to sundry creditors. This is the amount we paid to sundry creditors. Salaries, general expenses. Next, rent and taxes, drawings, cash purchases. Next, they are giving balance at bank on 31st March 2022. It is balance at bank. It is cash in hand 500. But if you observe opening, we have only bank balance. There is no cash balance. Hope you understood. Yes, sir. Next one, look at particulars of other assets and liabilities are as follows. Other assets and liabilities. See, it is 1st April 2021 and this is 31st March 2022. Opening and closing. Till now, if you observe, they didn't give you any capital. Okay. Now, here they are giving sundry debtors, opening, closing, creditors, opening, closing, machinery also opening, closing. If you observe machinery, we are having opening 7,500 and closing also 7,500. Means there is no additional purchases or no sale of any machinery. If any depreciation is given, then we provide depreciation on machinery. Furniture also 1200 opening, 1200 closing, means there are no additional purchase of furniture or sale of furniture. If any depreciation is given, we provide depreciation on furniture also. Next, inventory. Inventory on opening date, it is opening inventory, closing inventory 5,700. Investments 5,000 opening asset, 5,000 closing asset. See, here they are giving opening date, assets and liabilities, but they are not giving capital. So here we have to prepare opening statement of affairs. Fine. Prepare final accounts. Final accounts means nothing but trading account, profit and loss account and balance sheet for the year ended 31st March 2022. After providing depreciation at 10% on machinery and furniture, they are giving depreciation 10% on machinery and furniture and 800 against doubtful debts. Here we have sundry debtors now. And do remember, depreciation is always calculated on the closing value of asset. Is it clear? That means, at the end of the year, we provide depreciation. At the same time, they are saying Provide doubtful debts also, and doubtful debts also we provide at the end of the year. Clear? That's it, students. So it is very simple problem. Now come to from the beginning of the problem. So now the requirement of the problem is preparation of final accounts. Here what we do now, draw trading account, profit and loss account and balance sheet formats first. After drawing trading account, profit and loss account and balance sheet formats, now draw opening balance sheet format. Working note 1, opening balance sheet. Working note 2, debtors account, sundry debtors account. Working note 3, sundry creditors account at present. So 3 working notes. Clear? Now look at. Now start problem from the beginning. Don't forget this logic. Whether the problem is from final accounts of sole proprietorship or incomplete records or NPO, whatever it may be. We start the problem from the beginning. We start the problem from the beginning. Do remember, students. Yes, sir. Now look at first one. Opening balance of cash means bank balance. This we show in the opening balance sheet. So go to opening balance sheet here. Minute. Opening balance sheet here. Balance sheet of A Adamji as on 1st April 2021. Bank balance is asset for us. So bank balance from cash statement 2800. Write down. That's it. Simply write down bank balance. Next. Second one, received from sundry debtors. What is the entry for this? Cash or bank account debit to debtors account. Anyway, the posting is there in the cash book. Now go to sundry debtors account credit side. Go to sundry debtors account credit side. Write down by cash 48,000. Is it clear? Try to follow. Next one. Cash sales 11,000 rupees. Cash sales. Cash sales are shown on the credit side of trading account. Yes or no? So go to credit side of trading account. Write down sales. So here cash sales how much? 11,000. Here you can show separately 11,000 cash sales plus we add credit sales. Credit sales can be calculated from debtors account. Clear? Next step. Capital brought during the year. This is nothing but additional capital. What is the entry for this? Cash or bank account debit to capital account. Anyway, the entry is there in the cash book itself, so that we go to balance sheet and we add this additional capital to the existing capital. Existing capital how much? We don't know. For that purpose only we are preparing opening balance sheet. Yes, sir. So fresh capital at 6,000. Next, interest on investment 200. What is the entry? Cash or bank account debit to interest on investment. Anyway, the entry is there in the cash book. Now interest on investment is income for us. The under account credit by interest on investment. Any difficulty here? No, sir. Next one. Come to credit side. Item by item we are giving the treatment. To also do the same. Next, payment to sundry creditors. What is the entry we record? Creditors account debit to cash or bank account. Entry is there in the cash book. Now go to sundry creditors account debit side and give posting to cash or bank. To cash 35,000. Yes sir, no students. Yes sir. Next one, salaries. Salaries is expense for us. Anyway, the entry is there in the cash book. The end, if they give the same thing as information, then what we do? We simply post first. We post into the cash book, then after we take it to the other accounts, either trading or P&L or balance sheet. But here it is there in the cash book. So salary is expense. Go to the P&L account straight away. Go to the P&L account straight away and write down salary 6,500. Next one, general expenses. General expenses are 2,500. Expense na, go to P&L account, write down to general expenses. Next one, rent and taxes 1,500. This is also expense for us. So go to P&L account, write down to rent and taxes. Next one, drawings. Drawings are deducted from capital. Go to closing balance sheet and deduct drawings from capital 3,600. Any difficulty here? No, sir. Next one, cash purchases. See, purchases are shown on the debit side of trading account. Cash plus credit. Here they are giving cash purchases. Now go to trading account debit side. First write down how much is cash purchase here. 12,000. 12,000 cash purchase. Credit purchase we can calculate from creditors account. Next one. Next they are saying Cash at bank and cash in hand. These becomes asset at the end of the year. So that go to closing balance sheet and write down cash at bank, cash in hand. Hope you guys are following. Yes, sir. Next one. So with this cash book is completed. From cash book, we have taken data to various places. Now come to additional information. This is very simple problem, student. And whatever the problem it is, however the problem it is, but if you can understand the logic now, then it is over. Okay. Next. Now look at sundry debtors opening balance, closing balance. Sundry debtors opening balance, go to opening balance sheet plus debtors account debit side. First go to opening balance sheet, write down sundry debtors. Opening balance sheet 14,500. At the same time, sundry debtors opening balance debit side 14,500. Now how much is the credit balance? Means closing balance. 17,600 is the closing balance. Go to debtors account credit side and write down the same by balance C by D 17,600. Now the same becomes asset for us. Go to closing balance sheet and write down sundry debtors 17,600. The adjustment for sundry debtors is provision for doubtful debts. So write down provision for doubtful debts 800. 800. And 17,600 minus 1800, 16,800. Now the same 800 is shown on the debit side of profit and loss account. Debit side of profit and loss account to provision for doubtful debts. Yes or no, students? Yes, sir. Next one. Sundry creditors opening closing. Now sundry creditors opening balance is shown on the credit side of creditors account plus opening balance sheet. Closing balance, creditors account closing balance plus balance sheet liability side. Closing balance sheet liability side. Look at first opening balance sundry creditors 5,800. Immediately the same 5,800 is taken to creditors account credit side 5,800. Now debit balance closing balance 7,900 debit 7,900 to balance. This is not brought down, this is carried down. To balance carried down. Yes, to balance carried down. Now the same becomes a liability at the end of the year. So that liability 7,900. This is how one by one item can be taken to the financial statements. Next one, machinery. Machinery at the beginning 7,500, at the end 7,500. First go to opening balance sheet. Go to opening balance sheet, write down 7,500. Yes, sir. Now come to closing balance sheet. Write down the same machinery 7,500 here. Machinery 7,500. But they said provide 10% depreciation on machinery. Yes, sir. Depreciation 750. 10%. 7,500 into 10%, 750. Remaining amount 6,750. Now the same 750 becomes expense for us. So P&L account debit to depreciation on machinery 10%, 750. Next one, furniture. The furniture is 1,200. Opening closing. First go to opening balance sheet and write down furniture 1,200. Opening balance sheet furniture 1,200. Now the same comes at the end of the year, furniture 1,200, and they said provide 10% depreciation. So 10%, 120. Total 1080. Now the same 120 is taken to the profit and loss account. See, to depreciation on furniture 120, total 870. Total depreciation 870. Yes sir, no students? Yes sir. Next one. Inventory, opening inventory, closing inventory. Opening inventory, trading account debit, and at the end of the beginning opening balance sheet, asset. Look at opening inventory 3,900. Opening inventory. Next, opening balance sheet inventory 3,900. Next, closing inventory. Look at closing inventory is shown on the credit side of trading account first. Closing inventory 5,700, and balance sheet asset side closing inventory 7,500. Over. Next one. Investments, opening 5,000, closing 5,000. There is no adjustment for investment now. Yes sir. Now look at, suppose if rate of interest is given, suppose they said rate of interest is 10% interest, 10% investments. Not here, here they mention like this, 10% investment. 10% investments means what? We get interest 10%. 10% is the rate of interest. From the beginning of the year we have investments now, 5,000 into 10%, 500 rupee interest we should get. But here observe how much interest received, 200. Means remaining 300 is receivable. This is implied adjustment. Here we don't have, but in some cases they may give you like this. Is it clear, students? Yes sir. Now opening balance sheet 5,000, closing balance sheet 5,000. Look at opening balance sheet 5,000, investments. Closing balance sheet also 5,000 investment over closing balance sheet. With this, all the information from the problem is taken. Each and every information from the problem is taken to the answer. Now, here we have open trading account, profit and loss account, balance sheet. First, come to opening balance sheet. Balance the opening balance sheet. So, total assets 34,900, total liabilities. Total assets minus total liability, we get capital. This is the balancing figure. And this capital is taken to the closing balance sheet. See, Adam's capital on 1/4/2029, working note 1. Don't forget to give the working note reference 29,100. Is it clear, students? Yes, sir. So working note 1 is completed. Now come to working note 2. Working note 2. Okay. Yeah. Total debtors account. Come to total debtors account first. See, if you observe, yeah, debtors total credit 48,000 cash paid to debtors and 17,600 balance CYD. Total 65,600. Now, the difference in debtors account nothing but credit sales. Now, this credit sales is taken to the trading account credit side. How much? 51,600. 51,600. How much total? 62,100. Next, come to creditors account. See, here you need not to prepare sales account separately. You need not to prepare sales account separately. And at the same time, you need not to prepare purchase account separately. Okay, now come to total creditors account. Balance creditors account first, total debit 42,900 minus credit 4,800. Difference amount is nothing but credit purchases. How much is the credit purchases? 37,100. And this same becomes trading account debit side 37,100. Total becomes 49,100. Yes or no? Any working note pending? Debtors account, creditors account completed. Okay, fine. Now Adam's capital directly you can show in the balance sheet. No need to prepare separately. Fine, sir. Now all working notes completed? Yes, sir. Now come to trading account. Come to trading account first. See, total credit 60 to 100 plus 5,700. 60 to 100 plus 5,700. Total 67,800. Minus total debit 3,900 minus 49,100. It becomes 14,800 gross profit. 14,800 gross profit. This is carried to the profit and loss account by gross profit 14,800. Now total it 14,800 plus 200, total 15,000 minus debit 6,500 minus 1,500 minus 2,500 minus 870 minus 800. It becomes 28,300 is our net profit, and this is transferred to the capital account. Now immediately come to balance sheet. We have opening capital, additional capital. Now we have a profit of 2,830 at total. 39,100. Total becomes 37,930. Drawings 3,600 minus 3,600. We get 34,330. Add sundry creditors. Then it becomes balance sheet total 42,230. Now come to asset side and total it 6,750 plus 1,080 plus 570. Sorry, 5,700 plus 15,800 plus 5,000 plus 6,400 plus 500. We get 42,230 total. Observe our balance sheet total. Is it clear, students? So this is how we solve the problem. This type of problem you may get for 10 to 12 marks, minimum 10 marks. Hope you understood. So try to practice this problem once again. If you have any doubts, you can post your doubts, queries. Clear? That's it. Hello students. In this video, we discuss illustration 9. Illustration 9 is on the concept of conversion method. Conversion method. Under conversion method, how do we solve the problem? First, we open various formats. Major requirement of the problem is what? trading account, profit and loss account, and balance sheet. First, we open all these three formats. After that, we prepare some working notes out of them. So here we have various working notes to be prepared, but it depends on problem to problem. We prepare all these working notes or any working note, any one working note. Is it clear, students? Look at first one. Prepare cash and bank summary. Here we prepare cash and bank summary for sure. After that, total debtors account. Bills receivable account, if needed, we prepare. Otherwise, you don't need. Trade creditors account, we prepare compulsorily. Bills payable, if there is any need, we prepare. Otherwise, ignore. Next, opening statement of affairs. If opening capital is not given, so that we prepare opening statement of affairs. At the same time, any other account required, means any expense account or any asset account like that. But commonly prepared working notes are opening statement of affairs. If opening capital is not given, cash and bank summary, trade total debtors, and total creditors. These working notes we prepare compulsorily. Main answer: trading account, profit and loss account, and balance sheet. Now observe this problem here. So here we write the heading in the books of Mr. Manoj, trading account for the year ended 31st March 2022. At the same time, profit and loss account for the year ending 31st March 2022, balance sheet. Okay, look at the working notes here. Combined cash and bank account, at the same time debtors account and creditors account, and balance sheet on 1st April 2021. Okay, and expenses one account, expenses one working note. Is it clear, students? Yes. So these many working notes we open. Now first observe the problem here. And here solving problem within the stipulated time is very important. If I give you 1 hour or 2 hours of time, you can solve the problem by hook or crook. You solve the problem, but in the examination conditions, under the examination conditions, solving this problem within the stipulated time, that plays an important role. To solve this incomplete records problem within the stipulated time, follow the simplified approach. Sir, what is the simplified approach? Now you check this problem, then you can understand. Read the problem first. From the following data furnished by Mr. Manoj, you are required to prepare a trading and profit and loss account for the year ended 31st March 2022 and a balance sheet as at that date. All workings should form part of your answer. Yes. So here the requirement is trading, P&L and balance sheet. Do prepare quickly, immediately. Do prepare the formats immediately. Okay, sir. Next, assets and liabilities information they are giving. 1st April 2021 and 31st March 2022. How can we utilize this information while solving our problem? That is important here. Now look at first one, creditors. So creditors opening balance is given, and creditors closing balance is also given. Here we prepare creditors account first. Creditors account working note. This becomes opening balance in creditors account, and this becomes a closing balance in creditors account. Yes, sir. Completed. Next. If opening balance sheet is given, this becomes liability at the beginning of the year, and this becomes at the end liability at the end of the year. So one information, suppose this is the opening balance. This information, just a minute. This information we show on the credit side of trading account first. Yes, we show on the credit side of trading account first. See, 15,770. At the same time, the same amount can also be shown as a liability at the beginning of the year balance sheet. See, two places. Suppose if the opening balance sheet is not prepared, then you need not to show it in the opening balance sheet. And in an incomplete records problem, almost each item is shown in two places. Why? Because it is incomplete information. We have to make it complete. To make it complete, what we have to do first? First, record the journal entry. First, record the journal entry. After recording the journal entry, post them into ledger. Post them into ledger. After posting them into ledger, what is the next step? Posting them into ledger. Next step, balance them and prepare the trial balance. From trial balance, you prepare financial statements. Actually, this is the process we have to complete now. This is the process we have to complete. But here we are not recording the journal entry, we are not posting them into ledger, we are not preparing trial balance, but straight away we are preparing financial statements. That's why that's why here what we have to do is, here assume, visualize okay, this is the entry we should write and this is the posting. That's why we are not preparing all the ledger accounts, we are preparing very important ledger accounts which helps us to prepare the financial statements. Out of them, debtors account, creditors account, bills receivable account, bills payable account, and cash and bank summary. This information is important. If the opening capital is not given, then compulsorily we have to prepare opening balance sheet. Clear, students? Yes, sir. Now, creditors show first as opening balance in the creditors account and liability in the closing balance sheet. At the same time, next, look at the problem. Next item. This is the opening balance. Just a minute. This is the opening balance and this is the closing balance. Now 12,400 is the closing balance. Yes, sir. 12,400 is the closing balance. So this we show on the debit side of debtors account. Debit side of debtors account 12,400. Closing balance now. How do we write opening balance? By balance brought down. How do we write closing balance? To balance B, C by D. The same to balance C by D becomes opening balance for the next year by balance brought down. By balance brought down. Is it clear, students? Yes, sir. Now the same 12,500 is shown as a liability on the liability side of balance sheet. Sundry creditors 12,500. Closing balance sheet. Closing balance sheet. Like this, we have to place the account and its balance in two places. Two places. Next one. Sundry expenses outstanding. Sundry expenses outstanding. See, sundry expenses outstanding. 600 rupees at the beginning of the year. Liability, opening balance sheet. 330 rupees liability, closing balance sheet. Look at opening balance sheet and closing balance sheet. See, 330 rupees closing balance sheet. 330. Now look at the opening balance sheet. Opening balance sheet 600 liability. Yes or no, students? Yes. And here we have to do one adjustment. When it comes to adjustment, then we look at next one. Sundry assets. Sundry assets. How much they are giving? 11,610. And here 12,040. Means at the end of the year, asset account balance increase or decrease? Increased, sir. Why it is increased? We have to wait for some time. Why it is increased? We have to wait for some time. Now what we do, sir? Do one thing. 11,610 is the opening balance now. Yes, sir. Go to opening balance sheet. Go to opening balance sheet. Show sundry assets 11,610. 11,610. Now, immediately go to the closing balance sheet. Closing balance sheet. Write down sundry assets. Sundry assets 11,000. 11,610. 11,610. Sir, they have written 12,040 now, sir. Yes, wait for some time. 11,610 you write. Next. Inventory in trade. Inventory in trade. See, opening date, opening stock. Closing date, closing stock. How do we show it, sir? Simply go to opening balance sheet. Go to opening balance sheet. Inventory is asset. Yes, sir, 8,040. Now, the same opening stock becomes opening first item in the trading account now. First item in the trading account, look at opening inventory 8040. Opening stock. To know the opening capital, take it to the opening balance sheet. Opening stock generally taken to the trading account, debit side first item. Yes, sir. So in both the places we are showing. If opening capital is not required, then straight away take it to the opening or first item in the trading account. First item in the trading account. Very, very important, student. Each item analyze and take it to the appropriate place. I repeat, each item analyze and take it to the appropriate place. Enough. Over. Opening stock, generally it is shown on the debit side of trading account. If opening balance sheet is not prepared, then take it to the opening balance sheet. Opening capital is not given, then take it to the opening balance sheet. Next one. This is the closing stock, na? Yes, sir. Closing stock, first show it on the credit side of trading account. 11,120. 11,120. Now the same closing inventory becomes asset for us. Go to closing balance sheet. Go to closing balance sheet. Asset side, inventory in trade 11,120. Inventory in trade 11,120. Yes, sir. No, students. Yes, sir. Now, next one. Cash in hand and at bank. So here, if you observe cash in hand and at bank, both the amounts they are giving 6,960. This becomes asset at the beginning of the year. Yes, sir. Go to opening balance sheet. Go to opening balance sheet. Write down cash in hand and at bank 6,960. Yes, sir. Cash in hand and at bank 6,960. Over. Next, closing balance we have 8,080 closing balance. Closing balance becomes asset at the end of the year. That's why go to closing balance sheet. Go to closing balance sheet and write down 8,080 asset. 8,080 asset. Cash in hand and at bank. Now, we have to prepare compulsorily cash book, cash and bank summary. Sometimes cash book is prepared with the cash column and bank column separately. Sometimes we prepare cash and bank summary itself. In this problem, cash in hand and bank separate balances not given, so that we prepare combined cash and bank account. Opening balance sheet, sorry, opening amount, opening balance 6,960, closing balance 8,080. Opening balance 6,960, closing balance 8,080. Clear, everybody? Yes, sir. Okay, next one. Trade debtors. See, opening debtors not given, closing debtors given. Closing debtors given means go to debtors account, go to debtors account, credit side, write down closing balance first. 17,870 closing balance. Look at 17,870 closing balance. Now the same becomes asset na. Go to closing balance sheet and write down 17,870 credit. Over. If any provision is there, in that case we have to wait, because provision is deducted from debtors. Next one, details relating to transactions in the year. Till this what? Assets and liabilities information on 1st April and 31st March. Now they are giving details relating to transactions. So these are the transaction. First visualize the entry, accordingly you post it. Now first, cash and discount credited to debtors 64,000. Cash and discount, both the amounts credited to debtors 64. But here we need bifurcation of cash and bifurcation of discount. How much cash? How much cash and how much discount? These two information we need. So that wait for some time. Next, sales return 1450. Sales return they are giving 1450. Sales return entry. Sales returns account debit to debtors account. Means go to debtors account, go to debtors account credit side, give posting by sales returns or returns inward 1450 first. Now you people tell me, sales returns are taken to the credit side of trading account and deducted from sales na. Normally that will happen na. So immediately go to trading account credit side. by sales. Forget how much sales, just write down sales less returns 1450. Look at less returns 1450. If you solve the problem like this, then only we can complete without missing even one item. Otherwise, there is a chances of missing the items. Next one, bad debts. Bad debts 420. What is the entry for bad debts? Bad debts account debit to debtors account. So debtors account credit side. Debtors account credit side by bad debts. Debtors account credit side by bad debts 420. And immediately bad debts is loss for us and shown on the debit side of P&L account. Yes sir, go to P&L account first. Write down two bad debts 420. So here each item is recorded in two places. Clear? Next one, sales, cash and credit. Both cash and credit 71,810. Both 71,810. But here we need bifurcation of cash sales how much, credit sales how much. Credit sales we can calculate by preparing debtors account. Credit sales, or if you know cash sales na, if you know cash sales, then you can calculate credit sales. If you know credit sales, then you can calculate cash sales. So wait for some time. But total sales is 71,810, that we know. Total sales 71,810, that we know. But we need bifurcation cash and credit. For that, wait for some time. Next, discount allowed by trade creditors. Discount allowed by trade creditors 700 means discount received by us. What is the entry for this? Creditors account debit to discount received. Creditors account debit to discount received. So this is posted on the debit side of creditors account. Debit side of creditors account. Look at creditors account debit to discount 700. Now tell me, the same discount is income for us, gain for us, gain for us, and it is recorded on the credit side of P&L account. Credit side of P&L account. So go to profit and loss account credit side, write down by discount received. Hope you guys are following. Yes sir. Next one, purchase returns 400. Purchase returns 400. What is the entry for purchase returns? Okay, creditors account debit to purchase returns account. Creditors account debit to purchase returns account. So first go to creditors account debit side and write down returns outward 400. And tell me, the same returns are taken to the trading account debit side na? Yes sir, trading account debit side. Deduct from purchases. First write down purchase. Purchase how much we don't know. Less returns 400. Leave space for purchases and write down returns 400. Next sir, additional capital paid into bank 8,500. Additional capital paid into bank 8,500. Means what is the entry we record? Bank account debit to capital account. So capital account, so to the capital we add. To the capital we add this additional capital. First go to closing balance sheet, write down capital. We don't know the capital amount. Opening balance we don't know. Just write down opening balance, that's it. Don't write the amount. Don't write the amount now. Add additional capital. Additional capital. How much is the additional capital? 8,500. 8,500 is the additional capital. At the same time, in the cash and bank summary, we write bank account debit to additional capital now. Bank account debit to additional capital. Look at 8,500. Don't forget, two places we have to write. They are transactions. Visualize the entry. If you have any accounts here, post them. Post them. Otherwise, ignore. So here we are preparing cash and bank account. That's why we are posting to capital. And this additional capital is shown as an addition to the opening balance of capital. That also we did. Next one, realizations from debtors paid into bank. Realizations from debtors paid into bank means amount collected by debtors. How much amount collected? 62,500. What is the entry we record? Bank account debit to debtors account. Go to bank account first. Go to bank account first. Amount collected from debtors is 62,500 to sundry debtors. And debtors account also we are preparing. Yes sir. So by bank 62,500. By bank 62,500. Now observe the initial information, that is cash and discount credited to debtors. How much? 64,000. So cash and debtors credited to debtors account, cash and discount credited to debtors account 64,000. Yes, sir. Out of 64,000 cash and discount, how much amount collected? 62,500 collected. Means remaining 1,500 is what? Discount. What is the entry for discount? Discount allowed account debit to debtors account. So debtors account credit side by discount 1,500. This information is very, very important. Sir, why should we bifurcate, sir? Straight away you can credit 64,000 na? No. Why? Because discount allowed is expense, financial expense for us, and it is taken to the debit side of P&L account again. That's why we need bifurcation. Now tell me, discount 1,500 is taken to P&L account debit side. Profit and loss account debit side. To discount 1,500. Over. Next one. Cash purchases 1,030. Cash purchases 1,030. What is the entry we record? Purchases account debit to cash account. Purchases account debit to cash account. First, go to trading account debit. Go to trading account debit. Write down purchases. So here cash purchases 1,030. Cash 1,030. Wait. Now go to cash and bank summary. Credit side. Write down buy purchases 1,030. Write down buy purchases 1,030. Over. One transaction recorded in both the places. Next one. Cash expenses 9,750. Cash expenses. What is the entry we record? Expenses account debit to cash account 9,570. Expenses account debit to cash account 9,570. First, cash account credit side by expenses 9,570. Means these are the expenses we have paid in the current year. We have an adjustment for expenses. Now go to that adjustment once. Go to that adjustment once. Expenses paid in cash, how much? 9,570. For the current year, till we have to pay 330 rupees expense. Now they said current year expense outstanding. Current year expense outstanding 330. Current year expense outstanding 330. Add. Add. Then what is the total expense actually? 9,900. But if you observe, out of the expenses paid in the current year, we also pay the expense relating to previous year. Yes, sir. So in case of final accounts of sole proprietor, we did this adjustment. Now any expense relating to previous year paid in the current year, that must be excluded from current year P&L account. That's why that 600 is excluded here. This adjustment very important. Finally, how much expense we show in the profit and loss account? Because this is expense now, 9,300. Yes, sir. So 9,300, go to P&L account. Go to P&L account debit side and write down to sundry expenses working note 9,300. Very, very important. Next, paid by check for machinery purchased 430. Paid by check for machinery purchased. What is the entry we record? Machinery account debit to bank. Journal entry machinery account debit to bank. So first go to bank account, means cash and bank summary. Write down buy machinery 430. Buy machinery 430. Now already we have at the beginning of the year 11,610. 11,610. 11,610 worth of machinery place during the year we have purchased for 430. Then total machinery becomes 12,040, like this. How 12,040 becomes? Like this. That's why I said first write down 11,610. Now during the year we have purchased 430, total 12,040. Hope you guys are following. Next one. Household expenses drawn from bank 3,180. Household expenses means drawings. What's the entry we record? Drawings account debit to bank. So first go to bank account, credit side by drawings 3,180. At the end of the year, drawings are deducted from capital na? Yes, sir. Go to closing balance sheet and write down drawings 3,180. Over. Next. Cash paid into bank 5,000. Cash paid into bank 5,000. Contra entry. Bank account debit to cash account. Bank account debit to cash account. Go to combined cash and bank. Write down bank account debit to cash. Sundry. contra entry. On the credit side also, by sundries, contra entry 5,000. You may ask, sir, there is no effect na sir. 5,000 debit, 5,000 credit. Remember two column cash book. Bank account debit, bank column 5,000, cash account credit, cash column credit side 5,000. Ultimately, there is no effect, but they said they have given the entries na, so that we have to write. Next, cash drawn from bank 9,240. Again, contra entry, cash account debit to bank account. So again, contra entry 9,240, cash account debit to bank 9,240. On the credit side, by cash 9,240. Again, there is no effect. Look at 9,240 debit, 9,240 debit, no effect. Next, cash in hand 31st March 2022, 1200. They are giving cash in hand 1200, but if you observe in the problem, they said cash and bank balance both together how much? 8,080. Cash and bank balance both together how much? 8,080. The same amount we take it as closing balance in the cash and bank, by balance C by D 8,080. 8,080. Is it clear, everybody? Yes, sir. That's it. Next one. Next one. And last information is what? Checks issued to trade creditors 60,270. Checks issued to trade creditors, entry creditors account debit to bank account. So go to creditors account debit side, creditors account debit side to bank 60,270. At the same time, bank account credit side by creditors, or by creditors 60,270 over. Now observe, whatever the information they have given, all the information we have taken except sales. All the information we have taken to trading account, P&L account, or balance sheet, or in working notes also. Now, how to complete the problem? Here the students will face difficulty. Why, sir? Here we have opened trading account, profit and loss account, balance sheet. In addition to that, working note 1, cash book, working note 2, debtors, working note 3, creditors, working note 4, opening balance sheet, working note 5, expenses. That's it. Anyway, working note 5 completed. Now come to first working note 1, cash and bank summary. You just balance the cash and bank summary. Total credit is 96,800. Total credit 96,800, and debit side you just calculate except this one. Except this one you just calculate. 6,960 plus 5,000 plus 9,240 plus 62,500 plus 8,500. Total becomes 92,000. Debit side becomes 92,200 debit. Whereas credit is 96,800. Credit more or debit more? Credit side is more. Generally, cash and bank, cash column, which side is more? Debit side becomes more. But here we have written closing balance also. Closing balance also written. Now, here the question comes, how this difference is taken. First of all, calculate how much is the difference. 96,800. The difference is 4,600. How we take this difference? Nothing but, if you observe in the problem, they have given cash sales and credit sales put together 71,810. But we don't know how much cash and how much credit means. And observe this cash and bank summary, one item is missing. What is that? Cash sales. If we sold goods for cash na, then we have to give posting na, cash account debit to sales. That is missing. That's why the missing figure in the cash and bank summary we are taking as 4,600. This difference only. 4,600. This difference only. Is it clear, students? Yes, sir. Now, this is our cash sales. Go to trading account once. Go to trading account. Go to trading account once and write down, this is cash sales. Now, what is the total sales? 71,850. Sorry, 71,810 is the total sales, minus 4,600 is the cash sales. Difference is nothing but 67,210 credit sales. So here credit sales are calculated now. Yes, sir. Now credit sales, what is the entry? Debtors account debit to sales account. So immediately go to debtors account, give posting on the debit side to credit sales 67,210. This is very, very important. After writing credit sales, now you can balance debtors account now. Balance debtors account, how much balance you are getting? 16,530, and this balance becomes opening balance of debtors. After calculating opening balance of debtors, immediately go to opening balance sheet, write down write down sundry debtors 16,530. 16,530. Now here, if you observe the opening balance sheet, all items are recorded. Now total it. 43,110 debit, sorry, total assets 43,140 minus total of liabilities except capital, total of liabilities minus 15,770 minus 600. So here opening capital becomes 26,770. This is the balancing figure, because we know the equation assets is equal to liabilities plus capital. Liabilities plus capital. So here assets minus liabilities 26,770, and this capital becomes opening capital. Go to closing balance sheet, write down this opening capital 26,770. Very, very important. Yes, sir. Now check whether all working notes are completed. Till the completion of working notes, you should not go to trading P&L and balance sheet. Look at cash, cash and bank account completed. Yes, sir. Debtors account completed. Yes, sir. Now come to creditors account. Creditors account, observe here. Total debit is 73,770 minus opening balance is 15,770. This is not balancing figure actually. This is the balancing figure. Deduct. How much you are getting? 58,000. What is this 58,000? Credit purchases, sir. Credit purchases na? Yes, sir. Immediately go to trading account debit side. Trading account debit side. Here we have credit purchases. Cash purchases, credit purchases. Total purchases are 5930. Now check any working note is pending. I think all working notes are completed. Yes, sir. Now come to trading account immediately. Trading account. Here the flow is very important. First, balance the trading account. Total credit, total debit. So here it gives you gross profit 14,810. Now this gross profit is carried to the profit and loss account 14,810. Now again balance this P&L account. You know balancing procedure. Yes. So here we have a net profit of 4,290, and this profit is ultimately added to capital. So 4,290 add to the capital 4,290. Now here opening capital we have 26,770 from working note. Don't forget to give working note reference. 1, 2, 3, 4. Working note 4. Working note 4 reference. 26,770. During the year he contributed 8,500. During the year we have a profit of 4,290. This becomes the total 39,560. And during the year he has withdrawn 3,180 minus 39,560 minus 3,180. That gives you 36,380. 36,380 plus 12,400 already creditors we have, plus 330 outstanding expenses 49,110. Liability side also you balance, you get the same answer. This is how we complete the problem. Very, very important, students. So understanding the flow is very important. So just go through this problem once again. If you want, watch the video once again to understand the flow. Is it clear? This is how we complete the answer. Trading account, profit and loss account, balance sheet, and cash and bank account, total debtors, total creditors, and balance sheet, and expenses. 5 working notes. Sir, how many marks, sir? 10 to 12 marks. You get 10 to 12 marks for this problem. Sir, how can we complete? Simple. First, draw all the required formats and take the information one by one and write down the information in the required field, required place, so that first complete the all working notes. From working notes, you get some missing amounts. Take all these missing amounts to the trading P&L or balance sheet wherever required. After that, first balance trading account, you get gross profit. That gross profit is taken to the profit and loss account credit side. Here you get net profit. Net profit is taken to the balance sheet. After that, complete the balance sheet. This is the problem solving technique. Is this clear, students? Yes, sir. Now check the problem once again. If you have any doubts, you can post it. Clear? Right. Hello students, in this video we discuss practical question 1. Observe, this question is quite interesting. A firm sold 20% of the goods on cash basis and the balance on credit basis. Means, let us say sales are 100. Sales is equal to 100. Out of this, how much is cash sales and how much is credit sales? Sir, cash sales 20%, sir, means 20 rupees. Remaining all are credit sales, means 80 rupees. Yes, sir, no students? Yes, sir. Debtors are allowed 1.5 month credit. Debtors are allowed 1.5 month credit. Means, suppose if I purchase goods on 1/4/2025, if I purchase goods on 1/4/2025, debtors are allowed 1.5 month time. Means plus 1.5 month. Means let us say 15/6/2025 is the due date. 1.5 month roughly I am taking. Okay, 15/6/2020, 2015. Just a minute. No. It is 15/5. 15/5. 1.5 month, na? April month plus May month, 15 days. 1.5 month credit. And their balance as on 31st/3/2021 is 1,25,000. Means 31/3/2021. What is the debtors balance? 1,25,000. When do we collect this amount? After 1 month, 1.5 month. After 1.5 month. Like this, how many times we collect the amount from debtors in a year? I repeat, they are saying we generally allow 1.5 month credit period, 1.5 month credit for the customer. And how much balance we have regarding debtors? 1,25,000. On 31st March 2021, how much balance we have? 1,25,000. Like this, how many times we collect amount from debtors? And suppose 1,25,000 rupees, when do we collect? After 1.5 month. After 1.5 month. Now you people tell me, in a particular, if you take one financial year, 2024-25 financial year, how many times we collect the amount from debtors? How many times we collect the amount from debtors? Means, simply in a year, how many months total? 12 months. Divided by, what is the time period we are allowing? 1.5 month. Means 12 divided by 1.5. 12 divided by 1.5, we get 8. Means 8 times in a year, 8 times we collect the amount from debtors. 8 times we collect the amount from debtors. Every time, how much amount is due from debtors? I repeat, every time, how much amount due from debtors? 1,25,000. They said 31/3/2025, 1,25,000 rupees the amount due from debtors. Like this, how many times the amount becomes due in a year? 8 times. How can you say? Because debtors are allowed 1.5 month credit period. In a year, we have 12 months divided by 1.5. So 8 periodical payments we get from debtors. Each time we get 1,25,000. Means what is our credit sales? 1.25,000 into 8. 1,25,000 into 8. So 10 lakhs is our credit sales. 10 lakhs is our credit sales. This 10 lakhs credit sales equal to how much percentage? 80%. Why? Because if total sales 100, out of them 20% cash, 80% credit. Here we have calculated only credit. So 10 lakhs is for 80%. Make it 100%. Means 10 lakhs divided by 80%. Make it 100%. 10 lakhs divided by 80%. How much you are getting? 12,50,000 you are getting. 12,50,000 you are getting. Observe carefully. Is it clear, students? Yes, sir. So that is your answer. They are asking what is our total sales during the year. It is simple. It is very little bit Common sense. Okay. Assume that the sale is uniform throughout the year. This condition is important. The sales are uniform throughout the year. Means every time we sell goods 1,25,000. Like that we sold goods 8 times. 125 into 8, 10 lakhs. Calculate total, calculate the credit sales. 10 lakhs already we calculated, and total sales. This 10 lakhs is equal to 80%, make it 100%, 12 lakh 50 of the company for the year ended 31st 3 2022. This is our problem. Look at computation of credit sales and total sales. Credit sales for the year ended 21-22 is equal to, this is the formula, T, 12 divided by 1.5. How much you get? 8 times. Every time how much amount becomes due? 1 lakh 25. 1 lakh 25 into 8, 10 lakhs. This is our total credit sales. This is equal to how much percentage? 80 percentage. Make it 100%. So total sales for the year ended 21-22 is equal to credit sales into 100% by 80%. You get 12 lakh 50. This is another simple problem, student. Okay. Hello students. In this video, we discuss practical question 2. Practical question 2. Observe, Mr. A runs a business of ready-made garments. Okay. He closes the books of accounts on 31st March. Fine. Every year 31st March he is closing the books of accounts. The balance sheet as on 31st March 2021 was as follows. So they are giving the balance sheet as on 31st March 2021. But observe, go to at the end of the problem. On the evening of, okay, fine, you are required to prepare trading and profit and loss account for the year ended 31st March 2022. For which year they are asking financial statements? 31st March 2022. But here they are giving balance sheet on 31st March 2021. Means this is the opening balance sheet, or this is the balance sheet at the end of the previous year. Now they are asking us to prepare current year financial statement. So here you have capital. Look at A's capital. Means you need not to prepare any opening balance sheet as a working note. This is enough. Okay. Now look at, so what are the assets, opening date assets and liabilities? Observe, A's capital, okay, creditors, liability, furniture, stock, debtors, cash at bank, cash in hand. Fine. Look at the information. You are furnished with the following information. Okay. Here's the sales. First, what we do? Draw the required formats first. Draw the required formats. Trading account, profit and loss account, balance sheet. In addition to that, our regular working notes are debtors account, creditors account, and cash book. Cash book, cash and bank columns. Here, cash in at bank, cash in hand. Separately, they are giving na, so that prepare cash and bank account. Clear? Now, first look at A's capital is there. Yes, sir. So A's capital is shown on the liability side of closing balance sheet. Yes, sir. So go to closing balance sheet liability side. Write down A's capital 4,04,000. Over. Next, creditors 82,000. How much creditors we have? 82,000. Right away take this creditors to creditors account, credit side, opening balance. By balance brought down. Creditors account by balance brought down 82,000. Clear? Next. Now come to assets side one by one. Furniture, how much we have? 40,000. How much furniture we have? 40,000. Go to closing balance sheet. Write down 40,000 in the inner column first. Write down 40,000 in the inner column. If any additions are there, add. If any sold, if any furniture sold, minus. If any depreciation provided, minus. Next, stock. So this is the opening stock now. Go to trading account debit side and write down to opening stock 2,80,000. Next, debtors. Debtors, this is the opening balance in debtors account. Go to debtors account debit side and write down to balance brought down. To balance brought down 1 lakh. Over. Are you able to understand? Next, cash at bank, cash in hand. Opening balances. So do prepare cash and bank summary. Cash and bank summary. Okay, here I will prepare cash and bank summary. Look at cash book. You can prepare this working. So here it is cash and here it is bank. Is it clear? Yes, sir. Now tell me what is the opening balance? Opening balance of cash at bank 28, cash in hand 38. Right. So here I am writing two balance brought down. Two balance brought down. 28,000, 38,000. So cash 38, bank 28. Is it clear? So this is how you can prepare cash book. Right. Next step. Now look at the additional information. His sales. This point is very, very important, students. His sales for the year ended 31st March 2022. 31st March 2020 means 2022 means current year 21-22 were 20% higher than the sales of previous year. Means indirectly they are giving sales information. Current year sales are 20% higher than the previous year sales. Let us assume the previous year sales are 100. Now what is current year sales? 20% more na. So 20% means 20. So current year sales becomes 120 rupees. Current year sales becomes 120 rupees. Understood this logic? Yes, sir. Out of which 20% sales was cash sales. Now out of this 1,20,000, how much is cash sales? 20%. So 120 into 20%, 24 rupees. And what about remaining credit sales? Remaining is nothing but credit sales. Credit sales are 96 rupees. 96 rupees. Look at this is the first point importance. Let the total sales be 100. Current year sales are 20% more than the previous year sales. Then total sales becomes 120. Out of 120, cash sales are 20%, 80% credit sales. Means 120 into 20%, 24 credit sales 96 rupees. This is for example, students. Example. Next, total sales during the year 2021. 2021 means previous year. Previous year sales are 5 lakhs. So look at here. Previous year sales are 5 lakhs. Okay. Current year sales are 20% more, na? 20% more means how much? 1 lakh. 5 lakh into 20% how much? 1 lakh. Then total sales becomes 6 lakhs. This is the total sales. Out of 6 lakh rupee, how much is cash sales? 20%. How much is credit sales? 80%. Understood? Now 6 lakhs into 20%, 1 lakh 20,000 is cash sales and credit sales 4 lakh 80,000. Hope you understood this calculation. Yes, sir. Now total sales 6 lakhs is shown on the credit side of trading account and 1 lakh 20,000 cash sales, cash column, 4 lakh 80,000 credit sales. Post the entry in debtors account. See, three amounts, three different places. Now first one, go to trading account credit side, write down buy sales, credit, cash. Understood everybody? So total sales are 6 lakhs. Now go to cash book, write down two sales, cash column 1 lakh 20,000. Cash sales now? Yes, sir. Next, go to debtors account debit side, two sales 4 lakh 80,000. Hope you people are following. Yes. So this is the logic, student. This is logic. Next one. Look at the next point. So first point importance is relating to sales. Total sales, cash sales, credit sales. Second point. Payment for all purchases were made by checks only. See, whenever you purchase goods, we issue checks. Okay, this is just information. Next, goods were sold for cash and credit both. Okay, credit customers pay by checks. Credit customers pay by checks only means suppose we sold goods. Now We sold goods worth of 4,80,000 rupees. This is the amount we collect from debtors, na? Yes. How you are collecting the amount, in cash or in checks? In check. That is the information they are giving. Next, depreciation on furniture is to be charged 10%. Already here we have furniture 40,000, na? On that provide 10% depreciation. Okay, sir, fine. So go to closing balance sheet, write down depreciation 10%. Depreciation at 10%. Look at 40,000 into 10%, 4,000, remaining amount 36,000. And the same depreciation is taken to the P&L debit side. So 2 depreciation on furniture 4,000. Hope you are following. Yes, sir. Next, Mr. A sent to the bank the collection of the month. Collection of the month means amount collected by the debtors. I repeat, collection of the month means amount collected by debtors at the last date of each month. Suppose let us take first April 2021. April month, whatever the amount collected from debtors, the total amount is sent to bank only at the end of the year. Means he will collect the amount during the month of April, 1st to 30th. At the end of the month, 30th April, he deposit money into bank. That is the information they are giving. But how he is depositing? After paying salary of 2,000 to clerk, office expenses 1,200 and personal expenses 500. During the month of April, he collect the amount from debtors. Out of that amount, first he will pay salary 2,000 per month, office expenses 1,200 per month, personal expenses drawings 500 per month. After deducting all these things, whatever the cash left, that is deposited into bank. That is what they are saying. Is it clear, everybody? Yes, sir. Now here indirectly they are giving expenses information. Yes, sir. Salary is expense. So in the cash book credit side, write down by salaries. See, 2,000 per month into 12 months, cash column 24,000. Yes or no? 2,000 per month. Next, office expenses. So by office expenses, how much? 1,200 per month. So 1,200 into 12. 1,200 into 12. 14,400. 1,200 into 12. 14,400. Next, drawings. 500 rupee per month into 12 months, it comes to 6,000. These are the cash payments. Now the same becomes expense. Salaries and office expenses, take it to the P&L account debit side. Drawings, deduct from capital. Look at, go to the P&L account and write down 2 salary 24,000, 2 office expenses 14,400. Now drawings, deduct from capital 6,000 rupees. Understood? Sir, how much amount deposited? That we can only understand, that we can only calculate amount collected from debtors. So that we calculate what is the amount collected from debtors. Okay, next. What is the next information? See, we are solving problem line by line. Sixth one, analysis of bank passbook. What? Analysis of bank passbook for the year ending 31st March 2022 disclosed the following. So these are the transactions from bank. Okay, payment to creditors. What is the entry we record? Creditors account debit to bank account. So immediately bank account credit side by creditors. Bank account credit side by creditors. How much? 3 lakhs. Over. Immediately creditors account debit side. To bank. Clear, students? Next one. Payment of rent up to 31st March 2022. 31st March 2022 means at the end of the year, 16,000. Entry, rent account debit to bank account. So by rent. So here you can write much? 16,000. And same 16,000 is taken to the P&L account debit side. So to rent. 16,000. Next, over here. Cash deposited into the bank during the year 80,000. We have deposited cash into bank 80,000. Contra entry, yes sir. Bank account debit to cash account. Bank account debit to cash account. So here I am writing to cash. The brackets I am writing contra 80,000 cash deposited. And here by bank contra 80,000. Over. Next. The following are the balances on 31st March 2022. 31st March 2022 means closing balances. Stock, how much we have? It is nothing but closing stock, na? Yes, sir. Closing stock is shown at the trading account credit side. Closing stock. At the same time, balance sheet asset, stock, 1,60,000. Next, debtors 1,20,000 rupees. Debtors. So, at the end of the year, balance sheet, debtors 1,20,000. Again, debtors account closing balance. By balance carried down 1,20,000. Next, creditors for goods 1,46,000 closing balance. So go to creditors account, debit side, to balance brought down. The same becomes liability at the end of the year. So creditors 1,46,000. Is it clear? Next, over. On the evening of 31st March 2022, the cashier absconded with the available cash in the cash book. Oh my god, what happened? On 31st March 2022, exactly at the end of the year, the cashier absconded with the available cash in the cash book. Means, if you observe the cash column of cash book, observe whatever the cash we have at the end of 31st March 2022 means now we balance cash book. Whatever the closing balance we should have, that amount is taken by the cashier. Means that amount is lost. So it is a loss. First of all, we try to calculate how much cash lost, that we need to calculate. For that purpose, that's it. For that purpose, let us close one by one accounts first. Working notes. First come to creditors account. Creditors account debit side 3 lakhs cash paid to them and closing balance 1,36,000, 1,46,000. Total becomes 4,46,000 minus opening balance 82,000. 4,46,000 minus 82,000 gives you 3,64,000. This is nothing but our purchases. The same amount is shown on the debit side of trading account, two purchases, working note 1. Don't forget to mention working note difference. Next, second account. Calculate total sales calculation already we did. Okay, 6 lakhs is the total sales. Calculation of credit sales, this also we did. This is a calculation of 4,80,000. Next, calculation of cash collected from debtors. How, sir? Balance debtors account. Opening balance of debtors how much? 1 lakh. During the year we sold how much? 5,80,000. Total amount receivable from debtors how much? 5,80,000. 5,80,000 minus how much amount collected from them? Sorry, how much amount still due from them? 1,20,000. Means 4,60,000 rupees amount is collected from them. This is the balancing figure. 4,60,000 we have collected from them. This is the balancing figure, and the same is taken to the cash book. So two debtors. How much amount collected? Sorry, debtors are collected through check, na? Debtors are collected through check. So 4 lakh. They said debtors collected through check, na? 4,60,000. Over. Next one. Next working note. Calculation of amount of cash defalcated by the cashier. Okay, here we have bank account. Already we are preparing cash book, na? Cash column also. If you prepare cash book, so there you can calculate how much cash lost, at the same time what is the bank balance at the end of the year. You get the same answer. Look at. First, let us balance the cash column. First, let us balance the cash column. Debit side how much? 38,000 plus 1,20,000. Total 158. Minus payments 24,000, 14,400, 1,000, 80,000. 33,600. 33,600. Look at opening cash balance how much? Okay, just a minute. What is the opening cash balance? Just a minute, something, there is a mistake in cash balance. Yes, here make a small correction. Make a small correction. This is cash at bank 38,000. Cash at bank 38,000. Cash in hand 28,000. Only 10,000 rupees difference is there in cash and bank. Cash at bank 38, cash in hand 28. In our ICA material also they provided the same. Cash in hand 28,000, cash at bank 38,000. Okay. Accordingly, let me check it. Check this was, yeah. Cash is 28, bank is 38. Okay. Now you can check. Now how much here you get? 23,000. How much you get? 23,600 cash lost. So this we transfer to profit and loss account. This amount we transfer to profit and loss account because cash lost na, by profit and loss account, cash lost, balancing figure 23,600. Clear? Now take the same amount to profit and loss account debit side, 1,68,000. Profit and loss account debit side, go to profit and loss account debit side, loss of cash, working note 6, 23,600. This is very important in this problem. Next, balance bank column 38,000 plus 80,000 plus 4,60,000, total becomes 578 minus debit credit 3 lakhs minus 16,000 comes to 5 balance carried down 262, and the same 262 is taken at the closing balance sheet. The closing balance sheet, look at cash at bank 26. That's it. All workings are completed. All workings are completed. Now balance one by one. Trading account balance total 760. How much gross profit you are getting? 1,16,000. The same gross profit is carried here, 1,16,000. Now balance, you get net profit, and the same net profit is carried here, 34,000. Now you get total of balance sheet. Understood this? So once your working notes are perfect now, automatically you can complete the problem easily. Is it clear, students? Yes, sir. So check this problem once again. This type of problems are very, very important. Clear? Yes, sir. Hello, students. In this video, we discuss practice question 3. Practical question 3. See, Ram carried on business as retail merchant. Okay. He has not maintained regular account books. Okay. However, he always maintained 10,000 rupees in cash. Means always in the business, if you see, he will have 10,000 rupees cash and deposited the balance into the bank. Okay. So amount in excess of 10,000 he deposits into bank. He informs you that he has sold goods at profit of 25% on sales. About 100 rupees is the sale value. Let us say 100 rupees sale value. The profit is 25. Then the remaining 75 rupees nothing but what? Cost. Okay. The following information is given to you. Fine. See, this is opening date 1/4/2021, opening date 31/3/2022, closing date. Cash in hand, always they said 10,000 rupees in hand. So opening 10,000, closing also 10,000. Country credit as 4090. Cash at bank, observe, opening we have credit balance means overdraft, closing we have debit balance means favorable balance. Here be careful. Country data opening given, closing given. Stock in trade opening given but closing not given. Fine, we need to calculate. ROM's capital opening given. See, opening capital is given means you need not to prepare opening balance sheet. And closing not given. Fine, no problem. We calculate. Next, analysis of his bank passbook. See, bank passbook is nothing but bank transactions. Bank passbook is nothing but bank transactions. Okay. Payment to creditors through bank. Payment for business expenses. Receipts from debtors. Okay. Loan 1 lakh taken on 1/10/2021. Why they are giving 1/10/2021? To calculate interest on loan at a 10% per annum. Okay. Cash deposited in the bank 1 lakh. This is a contra transaction. Next, he informs you that he paid creditors for goods 20,000 in cash. See, already we have paid 7 lakh rupee worth of check. It's through bank. And also we are giving 20,000 rupees in cash. And salary is 40,000 in cash. So this information is in cash. He has drawn 80,000 in cash for personal expenses, nothing but drawings. During the year, Ram had not introduced any additional capital. Okay, no problem. Surplus cash, if any, is to be taken as cash sales. Means what? This is very important point in this problem. Surplus cash, if any, is to be taken as cash sales. Means prepare cash book or cash account. Opening balance of cash we have. Opening balance of cash we have. Yes, sir. Closing balance of cash we have. Yes, sir. And here they said cash deposited 1 lakh. Yes, sir. What they are saying? Any surplus cash, if any surplus means excess cash. If you have any excess cash, then assume it as cash sales. Assume it as cash sales means in the cash column, whatever the difference we get, that can be assumed as cash sales. Okay. Next one, all purchases are on credit means there are no cash purchases. But when it comes to sales, there are cash sales and at the same time credit sales. Very simple problem. Next, you are required to prepare the trading and profit and loss account for the year ended 31st March 2022 and balance sheet. Fine. Now, you people tell me what sort of formats you draw now. Trading account, P&L account and balance sheet. After that, working note. Anyway, here cash and bank accounts we prepare. Cash book summary, cash and bank columns. Cash and bank columns. Clear? And after that we prepare opening balance sheet you need not to prepare. Anyway, debtors account we prepare and creditors account we prepare. That's enough. You need not to prepare any other account. But here cash book we prepare with cash and bank columns. I repeat, here cash book we prepare cash and bank columns. Cash book we prepare cash and bank columns. Yes sir, no students? Yes sir. So without wasting much time, pause the video and draw the formats. Clear? Now look at cash in hand, opening balance, closing balance. Opening balance sheet you need not to prepare. So that go to cash book, write down opening balance 10,000, closing balance 10,000. Right? Business 1 lakh 20. Here closing balance 10,000 is taken. By balance carried down 10,000 over. Now the same closing balance is taken to the closing balance sheet now. Yes sir, come to closing balance sheet once. Write down cash in hand 10,000 over sir. Very simple. Next, sundry creditors 40,000, 90,000. 40,000 sundry creditors account opening balance, creditors account debit, opening balance, by balance 40,000, closing balance 90,000. And the same 90,000 becomes liability at the end of the year. Yes, go to closing balance sheet, write down close sundry creditors 90,000. Next one, cash at bank, opening balance 50, closing balance 80. Now go to cash and bank accounts, write down opening balance 50,000 credit, closing balance by balance C by D 80,000. Do remember this is B by D and this is C by D. At the beginning they said overdraft, at the end they said favorable balance. Hope you guys are following. Yes sir. Next one, sundry debtors opening balance given, closing balance given. So go to debtors account, opening balance 1 lakh, closing balance 3.5 lakh. And the same closing balance is shown as an asset in the balance sheet. Sundry debtors 3.5 lakh. Next one, stock in trade. Opening stock is there. Go to trading account debit side, write down opening stock. But closing stock information is not given. Okay, wait for some time. ROM's capital. Opening capital is given. Go to balance sheet. Write down ROM's capital opening 3 lakhs. Over. Now look at additional information. Payment to creditors entry. Creditors account debit to bank. Go to creditors account debit side. Write down to bank 7 lakhs. At the same time, bank column by creditors. Bank column 7 lakhs first. Next, Payment for business expenses. Business expenses account debit to bank. First go to bank account credit side by business expenses 1 lakh 20 bank column, and the same business expenses becomes expense. Go to P&L account debit side and write down two business expenses 1 lakh 20. Two places. Next, receipts from debtors 7.5 lakh. Entry bank account debit to debtors account. Go to bank account debit side and write down two debtors 7.5 lakh. Debtors account credit side by bank 7.5 lakh. Next, loan 1 lakh taken. Entry bank account debit to loan account. So go to bank account debit side and write down to loan 1 lakh, and loan becomes liability for us. So go to balance sheet and write down loan. Loan 1 lakh. Actually here they have given including interest. Generate separately loan 1 lakh. See here loan 1 lakh plus interest we calculate separately 5,000. How sir? Very simple. Look at here. Here they said loan is taken on 1/10/2021, but the books of accounts are closed on 31st March 2021. How many months time gap is there? 6. Repeat. 1/10/2021 to 31/3/2021. How much is time gap is there? 6 months. So here we calculate interest. Here we calculate interest 1 lakh into 10% into 6 months time gap is there na 6%. Sorry, 6 by 12. How much interest you are getting? 5,000. And here if you observe, they didn't give any information regarding payment of interest. In that case, we assume this interest is outstanding, means outstanding expense. Outstanding expense nothing but liability, so including interest 5,000. And this interest is expense for us. So P&L account debit side again to interest 5,000. This is very very important implied. Next one, cash deposited into bank. Entry contra entry na bank account debit to cash. It's a contra entry. Bank account debit to cash contra. Next cash column by bank contra 1 lakh. Fine sir. Next, he informs creditors 20,000 paid in cash. Entry creditors account debit to cash. Creditors account debit to cash. So go to creditors account debit side, write down to cash. And go to cash account credit side, write down by creditors 20,000. 20,000. Yes or no? Yes sir. Next one. They said salaries 40,000 paid in cash. Entry salaries account debit to cash. Go to salaries cash account credit side, write down by salaries 40,000. The same salaries becomes expense for us. Come to P&L account debit side, write down two salaries 40,000. Next one, he has drawn 80,000 in cash. Entry drawings account debit to cash. Cash account credit side by drawings 80,000. And the same 80,000 is deducted from opening capital. So go to closing balance sheet and write down drawings 8. Next, that's it. No additional capital introduced. Fine. Surplus cash, if any, is to be taken as cash sales. And there are no credit purchases. Okay. And we sell goods. Any information regarding sale of goods? Okay, fine. That's it. Now come to first working notes. Come to working notes first. Debtors account to look at. Debtors account amount collected is given and closing balance also given. 7.5 lakhs, 3.5 lakh, total 11 lakh. Minus opening balance 1 lakh. So during the year, how much goods we sold? 10 lakhs. This is credit sales. Go to trading account to credit sales, credit side, buy sales, credit 10 lakh. Fine, over. Next, come to creditors account. Debit side, observe 7 lakh amount paid, 20,000 cash paid, closing balance 90. Total becomes 8 lakh 90. Minus opening balance 40. 8 lakh 10 minus 40. 7 lakh 70,000 is the goods purchased. And here in the problem, they specifically said there are no credit purchase. There are no cash purchases, means only credit purchases. So now this 7,70,000 is our purchases value. Go to trading account debit side and write down two purchases 7,70,000. Next working note is there cash and bank. First cash columns balance. See cash column credit side you can observe including closing balance is given, including closing balance. Credit side 1 lakh plus 40,000 plus 20,000 plus 80,000 plus 10,000. Total 2.5 lakh. Debit side observe minus 10,000 opening balance we have minus, that's it. only one item, except 2 lakh 40,000, only one item. Means here we have a difference of 2 lakh 40,000. What they said in the problem, any surplus cash is there, surplus cash that can be considered it as cash sales. Now this 2 lakh 40,000 we assume it as cash sales. Sir, how can you assume it is as cash sales? See, unless you have cash, how can you pay expenses like this? You have deposited 1 lakh rupee cash and you paid 40,000 salaries in cash, and you paid 20,000 to creditors, and amount withdrawn by the proprietor 80,000, and closing balance 10,000. Unless you have cash balance, how can you pay these many expenses through cash? So the difference in the cash column is taken as cash sales. Earlier we have credit sales 10 lakhs. Now cash sales 2 lakh 40,000. Total sales 12 lakh 40,000. Clear? That's it. Now come to bank column. Bank column. Bank column credit side, observe. Credit side. Okay. Debit side, observe first. Cash deposited 1 lakh. Data from debtors we collected 7.5 lakh. Plus loan we have taken 1 lakh. Total becomes 9.5 lakh. Now come to credit side. Opening we have overdraft minus 7 lakh we paid to creditors minus 1 lakh 20,000 expenses. Remaining nothing but balance, 80,000 rupees balance. And this is the closing balance of bank. Observe in the problem, closing balance of bank is not given. So simply go to closing balance sheet and write down bank balance, cash at bank. Working note 1, 2, 3. Is it clear, everybody? Yes, sir. So 3 working notes are completed. Now come to trading account. Come to trading account. In the problem they said, goods are sold. Just a minute. Where is this information? Goods are sold. Yeah, at the beginning itself. At the beginning itself, they said goods are sold. He has sold goods at a profit of 25% on sales. Profit percentage directly given, na? Yes, sir. So what is your sales? 12 lakh 40,000 into 25%. Now what is your gross profit? 3 lakh 10,000. So here gross profit is calculated directly. Generally, how the gross profit is calculated? Total credit of trading account minus total debit of trading account. But here credit side closing stock is not given. That's why they have given some hint to calculate gross profit. Once you calculate gross profit, then total debit minus total credit. Total debit calculate 2,80,000 opening stock plus 7,70,000 purchases plus gross profit 3,10,000. Total becomes 13,60 minus sales 12,40,000 and 1,20,000 is the closing stock balancing figure. And this closing stock is taken to the closing balance sheet and write down stock in trade 1,20,000. Clear, students? Yes, sir. Next one. Now come to P&L account, and this gross profit is carried to the next financial, profit and loss account minus expenses. So here we get 1,45,000 net profit. Come to closing balance sheet, add this net profit 1,45,000. 3 lakhs already opening capital we have, profit 145, total 445 minus drawings 80,000. So closing capital will be 3,65,000. 3,65,000 closing capital plus 1,05,000 loan plus interest plus creditors 90,000. Total becomes 5,60,000. Come to asset side, whether we see whether we get the same amount or not. 10,000 cash balance, bank balance 80, debtors 3.5 lakh plus stock in trade 120. So here we are getting 5,60,000. Again, this is a very simple problem. Most of the cases we are getting in the examination this type of problems, simple problems, no complexity, and these problems may be given for 10 to 12 marks. Hope you understood this problem, student. Yes. So practice this problem once again. If you have any doubts, you can post your doubts. Okay. Hello, students. In this video, we discuss practical question 4. This is very simple problem, students. So do remember one thing, whenever you are solving a problem on incomplete records, don't forget that first see the requirement of the problem, draw all the required formats, including working notes. Then after start the problem from beginning. Well, see, already during 15 minutes of reading time, you have studied the question paper well. So you have to remember at least 50% of the question in your mind. Forget about amounts. At least what we do, what is the first item, what is the next item, what is the linkage between two accounts, like this you have to plan within that 15 minutes. Clear everybody? Yes sir. Now look at, Lucky does not maintain proper books of accounts. Okay, fine. However, he maintains a record of his bank transaction. Which transaction? Bank transactions, and also is able to give the following information from which you are required to prepare his final accounts for the year 2022. Final accounts. So he is not he is maintaining bank transactions, but no proper books. Okay, fine. Look at, this is the information you are getting. First, this is the opening date 1/1/2022, opening date 31/12/2022, closing date. Fine, sir. Debtors, opening balance. We know that we open debtors account and we write this as opening balance. And if opening capital is not given, then we also prepare opening balance sheet, and this is shown on the asset side of balance sheet. Fine, sir. Closing balance is not given. Fine, we prepare debtors account, and so that we can calculate closing debtors. And the closing debtors value is taken to the balance sheet, closing balance sheet. Okay. Creditors opening balance is not given, but closing balance is given. Okay, take this closing balance to creditors account, debit side to balance C by D, and the same amount is shown on the liability side of closing balance sheet. Next, stock. Opening stock is given, closing stock is given. Opening stock, trading account debit, closing stock, trading account credit. At the same time, opening stock, opening balance sheet asset, closing stock, closing balance sheet asset. Bank balance, opening balance not given, but closing balance is given. Okay, prepare bank account. Why? Because they said he is maintaining bank transaction, so that we prepare bank account. Bank account starts with opening balance, but the opening balance is not able to. They are not giving, but closing balance is given by balance carried down. So now here in the bank account, whatever the balance we get, that balance becomes opening balance. Yes, sir. Now the same becomes asset in the opening balance sheet, and 50,000 is asset at the end of the year. Fixed assets opening balance 7,500. Closing balance 9,000. If you observe, fixed asset value has been changed from 7,500 to 9,000. Now here what we do, we prepare fixed assets account. 7,500 is shown on the asset side of opening balance sheet, and 9,000 is shown on the asset side of closing balance sheet. Yes, here we have a difference of 1,500. Why this 1,500 came? During the year any depreciation provided, or during the year any asset sold, or during the year any asset purchased? To know all these details, we prepare fixed assets account as opening balance. Next, details of his bank transactions were as follows. He is also giving details of bank transaction. Do remember, bank transaction. So here bank transactions are given, so that what we do, first we enter the transaction in the bank account, then after we post the same item in the required account. Received from debtors. What is the entry we record? Bank account debit to debtors account. So bank account debit side and debtors account credit side. Additional capital brought in 5,000. What is the entry? Bank account debit to capital account. So bank account debit side and capital, additional capital is shown as an addition to opening capital. Opening capital is given. Okay, otherwise we calculate. Sale of fixed asset, book value 2,500. Observe. Here we sold one asset which has a book value of 2,500 for 1,750. Here you can observe book value 2,500, but sold value 1,750. Here there is a 750 rupees loss. So it is very, very important. Here we have a 750 rupees loss, and this loss is taken to the profit and loss account debit side. Paid to creditors 2,80,000. What is the entry we record? Creditors account debit to bank. Creditors account debit side, bank account credit side. Expenses paid 49,250. Entry bank account, sorry, expenses account debit to bank account. Okay, bank account credit side, expense P&L account debit. Personal drawings 25,000. Personal drawings. What is the entry? Drawings account debit to bank account credit side, and drawings are deducted from capital at the end of the year. Yes, sir. Purchase of fixed asset 5,000. During the year we have also purchased a fixed asset for 5,000 rupees. Entry fixed assets account debit to bank account credit side, and fixed assets account debit side. I said already, we prepare fixed assets account. Opening balance is there, closing balance is there, and during the year we have purchased for 5,000 rupees fixed assets, and during the year we sold fixed assets for 2,500. worth of assets sold for 1750. Now there are so many adjustments for fixed assets, so that we prepare fixed assets account. Fine, sir. Next, no cash transactions took place. In our business, there are no cash transactions. Next, goods. This is the very important point for the problem. Goods are sold at cost plus 25%. So whenever we sell goods, the goods are sold at cost plus 25%. Cost of goods sold was 2,60,000. Cost of goods sold was 2,50,000. Means how much is the profit, sir? Very simple. COGS already given. Na? COGS is given. What is the formula for COGS? Tell me. COGS is equal to opening stock plus purchases plus direct expense minus closing stock. Yes sir, no students? Yes sir. See here, COGS is given. Opening stock we have in the problem. Opening stock is 50,000 opening, closing stock 62,500 closing stock. Direct expenses not given, take it as 0. And the remaining nothing but purchases. Now, here you get purchases as balancing amount. And here they have given cost of goods sold and profit margin also. So that here you can calculate easily gross profit now. Yes sir. So COGS is 2,60,000 into 25% is profit. So how much profit we are getting? 65,000 rupees is our profit. Cost plus 25%. COGS is nothing but what? 2,60,000 into 25%. How much we get? 5,000. And indirectly, sales information is also given here. Sales information. Sir, how sales information? Yes, sales is nothing but what? Sorry, GP is nothing but what? Sales minus COGS. Now here we have gross profit and COGS, so that what you can calculate, sales is equal to COGS plus gross profit. Yes sir, COGS is 2,60,000, gross profit is 65,000, total becomes 3,25,000 rupees sales sir. Very good. Which sales? Credit sales sir. Which sales? Credit sales. As they said, there are no cash transaction, means there are no cash sales or no cash purchases. All are credit purchases and credit sales. Hope you guys are following. Yes sir. So here we have to apply our intelligence techniques. As an accountant, you have to apply all your techniques. Here everybody. Fine sir. Now this is our problem. Now, simply first draw the required formats: working notes, fixed assets account, debtors account, creditors account, and opening balance sheet. Opening balance sheet. Is it clear, students? Yes sir. And bank account also, because bank account opening balance is not given now. Total 5 accounts we have to prepare. 4 accounts, 1 statement, that is opening balance sheet. Fine. Now look at, after drawing the formats, you people just pause the video and draw the formats. Now start the problem from beginning. Debtors, opening balance sheet asset, debtors account, debit balance. Go to opening balance sheet asset side. Debtors 1,02,500, and go to debtors account once again. To balance brought down 1,02,500 over sir. Next, creditors, opening balance is not given, but closing balance is given. So that go to closing balance sheet. Go to closing balance sheet. Creditors 46,000. Closing balance sheet. At the same time, go to creditors account. This is closing balance, na? Yes, sir. So by two balance E by D 46,000. Clear? Next, stock. Opening stock, closing stock. Go to trading account debit side. Trading account debit side to opening stock. Credit side by closing stock to 500. Now opening stock becomes asset at the beginning of the year, closing stock becomes asset at the end of the year. Go to opening balance sheet, write down stock 50. Next, immediately go to closing balance sheet, write down stock 60 to 500 over. What we are doing, we are writing the amounts in the appropriate place. That's it. We are not doing anything else. Okay. Next, bank balance opening not given, closing given. Okay, fine, no problem. Go to closing balance sheet first. Closing balance sheet, write down bank balance 50,000. Yes sir. Now go to bank account, write down closing balance. Balance E by D 50,000. Yes sir. Over. Next, fixed assets account. Go to opening balance sheet, write down 7,500. The same time, go to fixed assets account, write down opening balance 7,500. Okay, first fixed assets account, opening balance 7,500. Now go to opening balance sheet, fixed assets 7,500. Is it clear, students? Yes, sir. Next, details of bank transaction received from debtors, entry debtors account debit to bank. So go to debtors account, credit side, buy bank 340, bank account debit side, to debtors 340. Next, additional capital, bank account debit to capital account. So bank account debit to capital 5,000, and the same additional capital is taken to closing balance sheet. Additional capital 500 add to the capital. Next, sale of fixed assets 2,500 book value, but loss is book value 2,500, sold for 1,750. Entry bank account debit to fixed assets account. First go to bank account, write down sale of fixed assets 1750. Fixed asset account is credited na? Yes sir. By fixed asset, sorry, by bank 1750. But if you observe here, the important calculation is 2,500. See, depreciation knowledge you have to apply. Whenever we sell asset, now we calculate profit or loss on sale of such asset. So book value is 2,500 minus sale value is 1750. Difference amount is loss. Now all losses finally we transfer to P&L account. Entry profit and loss account debit to asset account. So asset account credit side by loss 750, and the same loss is taken to P&L account debit side to loss on sale of fixed asset. Like this we have to give accounting treatment. Okay, students. Next one, paid to creditors account debit to bank. Bank on the credit side by creditors account debit side to bank. Okay. Next one, expenses paid, expenses account debit to bank. Expenses P&L account debit to expenses, bank account credit by expenses. Okay. Next, personal drawings account debit to cash or bank. So drawings are deducted from capital. So go to balance sheet, closing balance sheet, drawings 25,000, bank account again credit side 25,000. Any difficulty here? No sir. Next one, purchase of fixed assets account debit to bank. Go to fixed asset account debit side to bank 5,000, bank account credit side by fixed assets 5,000. Over. Next, they said cost of goods sold is 2,60,000 plus 25% profit on that. Here you get two information. One, gross profit information. Two, sales information. Gross profit is taken to the trading account debit side. Look at two gross profit, 2,60,000 into 25%. This is very, very important in this problem. 65,000. Now COGS 2,60,000 plus 65,000 rupees profit. Total becomes sales. So by sales 3,25,000, and the same 3,25,000 rupees sales are taken to the debtors account debit side. This linkage is very important. Now go to debtors account debit side, write down sales 3,25,000 over. Now here we have opened some accounts. Now first close them. First come to fixed assets account, balance 12,500 debit, and credit side if you observe, credit side 1,750 plus 750, asset sold. Closing balance they have given 9,000. So it means 11,500 only. See, 1750, 750, 9,000. Total becomes 11,500. But debit side we have 12,500. What might be the difference? Nothing but depreciation. That's why here we have written depreciation balancing figure. The same depreciation is taken to the profit and loss account debit side to depreciation on fixed assets. So by preparing fixed assets, what we have calculated here? Depreciation on fixed assets. Now come to second working note, bank account. Observe bank account credit side all items are there, but bank account opening balance is missing na. So 2,80,000 plus 49,250 plus 25,000 plus 5,000 plus 50,000. Total becomes 4,09,250 minus debit side debtors 3,40,000 collection, capital 5,000 additional contribution, sale of fixed assets 1,750. So the remaining balancing figure is 62,500, and this becomes the opening balance. Now the 62,500 is taken to the opening balance sheet, because opening bank balance now. Go to opening balance sheet, write down bank balance. Don't forget to give working note reference. Next one, Second one completed. Now come to debtors account. Debtors account, credit side if you observe, 3,40,000 amount collected and 87,500 closing debtors. But they didn't give you opening debtors. Opening debtors. Okay, sorry. Opening debtors is given. Na? Opening debtors is given 1,02,500, and during the year we sold goods for 325. Total becomes 427,500 minus cash collected from debtors 3,40,000, means closing balance is 87,500. Now this becomes closing balance. Now closing balance of debtors. Go to closing balance sheet, asset side, and write down debtors 87,900. Assets anyway 9,000 rupees. Next working note, creditors. Look at creditors account. Amount paid to creditors and closing balance is given 2,80,000 plus 46,000. Okay, next purchases account. If you observe, the purchases account is the balance in trading account. Credit says sales they have given and closing stock also given. Debit side opening stock is given and gross profit is also given. Now the difference in trading account is nothing but what? Purchases. What is the amount of purchases? 270 to 500 worth of goods we purchased, and they said there are no cash transaction, means the total goods purchased on credit basis. Entry purchases account debit to creditors account, so creditors account to credit side by purchases. Over. Now the remaining amount becomes 270 to 500 deduct, and the remaining 53,500 becomes opening balance of creditors. If you observe, for debtors closing balance not given, for creditors opening balance is not given. Now this opening balance becomes asset at the liability at the beginning of the year, creditors 53,500. At the end, now balance this balance sheet, opening balance sheet. Credit side 7,500 plus debtors 1,02,500 plus stock 50,000 plus bank balance 62,500. Total 222,500 minus creditors opening balance 53,500. Difference amount is 1,69,000. And this 1,69,000 becomes opening balance, opening capital in the balance sheet. See, capital working note 5, 1,60,000. Now, here gross profit is there now. Brought down the gross profit. The P&L account, balance P&L account. Here we get net profit of 14,000, and this net profit is taken to the liability side of balance sheet. Now total it 169 plus 500 plus 14,000 net profit. Total becomes 188 minus drawings 5,000, 25,000. Total becomes 163. Closing creditors 46,000 plus 160. Total 2,09,000. Liability side. Now come to asset side. Total it. Asset 9,000. Closing balance of debtors 87,500, stock 62,500 plus bank balance 50,000. Total 2,09,000. Over. This is our problem. Observe students. Very, very important. Very simple problem. This problem previously they have given. Even for CMA Inter also, this chapter is there. These problems are important from CMA Inter point of view also. Hope you understood this problem. Very simple problem. Clear? Yes, sir.